Good morning, everybody. How are you guys doing? I'm trying to figure out why TradingView won't fill the entire screen. No? Stretch to fit? Huh. I don't know if I switch it. It's still fucking off. Why is that? Good morning. How's everyone's weekend been? So this has been driving me nuts for months, but when I use Epic Pen, so right now I'm drawing like a bear flag on Tesla, but on the like OBS, it's shifted up versus being centered on like the price action. Like if I draw a flat line at the resistance up here, say it comes out slightly above the resistance. That drives me insane, and I can't figure out why. It does that on here, but it doesn't do it on WeBull. I don't know if it's that like maybe this runs in like 1080p or something versus like just the native resolution. But having my line offset by like $5 every time I draw one is the most infuriating fucking thing. I can use like the built-ins, like the trend line here, right? And that's fine. But if I draw it by hand, it's just slightly off. Greek, I'm so excited. I can deduct my home office's expenses again. Yeah. I didn't buy too much this year, but there was something I got to deduct. I forget what it was. Besides the rent for my home office. Puts on Epic Pen. Maybe it is Epic Pen's fault, but then if it's Epic Pen's fault, why does it work on other programs? No, I don't think it's Epic Pen. You're self-employed though. I work for home at the benefit of my employer. The Republicans took that away with the Tax Reform Act they passed during the Trump admin. Took what away? The self-employed deductions. Well, you don't have to be self-employed, right? You can be employed by a company that you own. Does it have the same problem with another tab? They say Google's homepage or something. No, I don't think so. I mean, Chrome kind of, but only because Chrome's not sized the same. Well, at least I don't have Chrome sized the same way in OBS. But I know why it doesn't work on Chrome. I just don't understand why it doesn't work on TradingView. Employee home office deductions went away for non-owner employees. Hmm, interesting. That sucks. Robin Hood, good morning, man. Okay, so where are we gonna start? Do we want to do memes? I don't know if we give a shit this week. They're not going to be very important. Well, actually, I guess we have ETF FTDs starting this week. What do you think of the idea that SPX could continue on for the next 9-ish months until or unless Japan or the Fed actively accelerate the current slow drain of liquidity? Well, the Treasury is already working on that, right? I would disagree because if the Treasury and the Fed do nothing, banks are going to lean into the carry trade more, which is going to tighten financial conditions further and put more demand on like 3-month fixed strike vol, right? If 3 months fixed strike vol rises, that's going to pressure spot, and then we get kind of we would get like multiple periods of the same shit we saw between August and November, well, August and October of last year. Banks are still wildly desperate for that net interest income, right? Especially now with the BTFP closing, they may have to utilize the carry trade even more. And we've already seen quite a bit of activity picking up on that side of things over the last like month. I think that's going to continue. I think as it becomes more and more obvious that the Fed and Japan aren't doing anything, that the banks are going to lean harder and harder into that, which is going to push spreads, right? So we'll get the yield curve reinverting. More of that bull steepener. Bear steepener. So we're giving Japan Jim Carrey. Who are they giving us back in this trade? I didn't realize we were trading him to them. I thought he was okay. Interesting. I don't know. Who do you want? The Japanese have already given us so much: ramen, sushi, anime, waifus, anime waifus. That Japanese Iron Chef. Okay, that seems reasonable. 3 U.S. soldiers killed in Jordan. It's getting real. The heroes our generation needed. True, but I noticed in 2020 it took the market several months to react to the tightening of the spread, which led to SPX grinding up to higher highs until it finally rejected on March. Yeah, so the carry trade spread in 2020 wasn't nearly as wide as it is now. It was quite narrow. Yes, we did get a big run before everything blew up. But I think it also wasn't as highly leveraged as it is now. Significantly less so. I mean, if we take a look at it, here, go out to the 1 week, and we look at like total leverage going into 2020, right? This is kind of where we were like December, well, July through December of 2019. And the carry trade started to break down in Jan, right? We were pretty much rocketing this whole time. But yeah, it didn't start to break down until Jan. And then by the time they like slashed rates, and it finally broke down, that was just like the crash. So, but the leverage was, 1/6 of what it is now. And so back then it didn't really have a big effect on credit conditions and tightening those financial conditions. Now it does. We also had a lot of other things going on back then, but yeah, as far as the carry trade goes, I would say that its impact is more like what we saw before like the last time it was leveraged up this high was prior to '07, right? And so if we're seeing the slow breakdown of the carry trade, I'd say it'd be more similar to what we saw in like '08 into 2009. And one could argue that it's even more leveraged than it was then. Could you also look at the 3 and 6 month duration? Would that be closer to what most consider the risk-free rate? Um, yeah, yeah. You could look to the 3 and 6 month duration, but they've been going up, which means which is largely market expectations are that the Fed is less likely to cut now than they were previously. Don't forget that bonds just short squeezed up super hard. I don't know so much if the market's pricing in 6 rate cuts or simply bonds are still blown out from the massive short position that squeezed off of them. We're starting to see short positions accumulate on bonds again. Not so much the shorter dated end of the curve, but we're definitely seeing it on longer duration. I mean, Fed fund futures and like swap lines are probably a far more accurate picture and at least less volatile than the actual like forward yield of the 3 and 6 month. But they do kind of give you a sense of that moment in time. Yeah, I'm still watching Hum this week. Especially the first couple days this week, where I think we might see, you know, bigger ETF like sector side flows as we move into the big like mega cap tech earnings and the FOMC meetings, particularly in healthcare. So yeah, I'm still interested in Hum. Hum closed above that level where the market maker was gonna go long Vana, um, which is probably bullish. Obviously, it's insanely risky to try to play that. It's down a huge amount over the last, it's down a huge amount over the last few weeks even. Following their dividend and like the statements they made, it's down almost 23%. But yeah, I mean, Friday definitely started to confirm a little bit of a bounce. I'd like to see the rest play out. Delta neutral on this hasn't really moved much. I think it's still. Give me 1 second. I just want to make sure I have the most up to date one. Yeah, so Delta neutral here is at 391.63 now as of Friday's close. So right there. And that would be a bounce from here up. That was mean reverting. Could see a $30 move, which is fucking awesome. And then you've got like all the cover bid from the short positions falling off on the way up there too. So we could see that gap filled or even further. something spread between FFR and inflation rate. I was more gonna comment on how the Fed like leaned into using the Phillips curve over the rate hiking cycle more and more, as they seem to have less and less control over inflation in the early part of 2022 into the beginning of 2023. And then, with like the BTFP and stuff, they kind of had to let off the gas on raising rates because they were pushing banks underwater, right? And so we got that one last rate increase after the BTFP was established, and I think that was the last one we got, if I'm not mistaken. Um, and that at the time that left us with only like a fairly slim spread of like 2%, which is the target, right? But there have been a few instances like in August where inflation moved back up and narrowed that spread, and then if that spread narrows, then the Fed's target has to shift or they need to raise rates, right? And they didn't, but ultimately, we got the refunding announcement, and Japan didn't make any moves, and the Fed didn't make any moves, and everyone got all dovish, and that kind of saved things again. But if inflation spikes again, right, our spread between inflation and the federal funds rate is still very narrow. They would have probably wanted to see it double the rate of inflation, so closer to 6%. Over the long run, right? So like 6% over 2024 until we got down to about that 2.5% level, and then they could move it down to 5%. But now they don't have that option, right? Well, they do. They could always raise rates again, but they kind of handicapped themselves if we get another spike in inflation, which is very similar to what happened with Burns going into the late 70s. And then, when inflation, Burns and Volcker both kind of fucked up a bit. But they cut rates too soon, and that allowed inflation to reignite. And then the federal funds rate was insufficient to contain the rate of inflation, and inflation kept swelling. And so eventually they had to raise the federal funds rate significantly above inflation in order to get inflation down. However, our inflation is not driven by overlending as theirs was. And so the effect of raising rates is diminished compared to that period in time. That, and the Treasury is not doing JPOW any favors in keeping financial conditions tight because they're providing tons of short-dated liquidity. One second. Sorry about that. The institutions that are borrowing on leverage are needing to increase the amount of collateral held. So this is actually what ultimately led, I think, one of the largest things that led to the failure of Lehman and Bear Stearns back in 2007, 2008, was as they leaned more and more into the carry trade as rates increased, right, going all the way into 2007. And then when it became apparent that we were facing some financial headwinds, the Fed decided to lower rates, which started to close the spread. And as that spread closed, banks still needed to utilize it, but they had to increase their collateralization, right? And so to do that, they began to market securities that were, underwater, or as we now know, toxic, which lowered the value of those securities in their markets. And as more and more of those securities were sold off, the the total securities holdings for those banks began to decrease, both from the sale of those securities and from the devaluation of those securities. And so, next thing Lehman knew, they went and looked, and their mortgage-backed securities holdings were suddenly just not worth anything, right? Um, and they went under, and then yeah, and then obviously that led to a lot of marking to market, and then further sales, and that's where the contagion really begins. If everybody starts selling those assets become worth a lot less. I got hired into a large enterprise cloud services company. The CFO explained their valuation was based on the rule of 40 and how they're significantly below that. Was she bullshitting? Probably not. I mean, yes, but no. I mean, are they even close to it? All right, so I think we can just cover. We don't have a lot of time here, so I think we can cover memes um, throughout the week. If and just like if anybody has any specific questions, but Jamie and Upstart don't look very good. Upstart should stabilize in the first half. Most things should be fairly stable in the first half of this week. I don't think anything's going to be excessively bullish until we run into our first set of earnings, um, or like our first set of big earnings, which should be Tuesday after close, and then things will start to get a little more wild after that. But yeah, I don't think like Fubo or Beyond or anything's going to be very important right now. Upstart's not quite below delta neutral yet, so that can find support here at 3250 or right around 3250. Jimmy, you'll probably fall off the 1450 mark. Yeah, I don't think anything there is going to be very important. Hmm. Caterpillar, on the other hand, let's see if there's anything going on with that. Jimmy's FTDs will be more towards the end of this week, early next week. I don't think it's been shorted hard enough for them to have a significant effect. I'm not even sure if GME is liquid enough anymore or leveraged enough anymore for the FTDs to have a significant effect anyway. Um Over the last year and a half, the realization of like ETF FTDs has been pretty lackluster. So I would say I wouldn't worry about it too much unless you're actively selling covered calls, in which case, if it runs a bit, that's probably a good opportunity. So for Caterpillar, a little breakdown in call interest over the last like 4 days. Um, Dealer Delta's moved net negative, but Gamma hasn't. So there's a short play here, but it's risky. As long as Cat is above 280, because the dealer's still positive Gamma. Um, Cat might be like a good opportunity for selling covered calls if they don't have earnings this week, which I don't think they do. Yeah, so there might be an opportunity for selling like out of the money covered calls on Caterpillar since there's no earnings this week. and scalping some of that IV increase as it approaches earnings. It's double topped off of the long term like upside resistance. This tends to be a good, not so much a good short entry. Sometimes it's a good short entry. Right, there's plenty of tests where it like kind of just stays flat afterwards. But probably a good opportunity to sell covered calls above, maybe above like 305, but not with a lot of theta. So probably not a ton of yield to get off of that, but there could be some. I think Cat has 250 strikes, so you could probably do it without taking on too much risk, at least on the weekly expiration. But I'm gonna start with Apple. So Apple's also double topped and rejected off of its local high trend. Apple, interestingly, has guided down for the past 2 quarters. They should not be expected to beat, although they are priced as if they will. Um, Dealer delta is flat. Dealer gamma is still positive, but short vol has been falling off, and so we actually might see Apple continue down a bit into earnings. Um, and I'm thinking maybe we see it move to like 190. Yeah, maybe like 190 tomorrow. But then obviously we don't know what's going to happen at earnings. I would say that if there's any inclination that revenues could increase in Q1, or any of their sales data on iPhones looks better, which it could. Obviously, as we get out of the holiday season, that there's some chance that it could move back up. So I wouldn't short it into earnings. I probably won't play any of these, but this could give us a good idea of like what market sentiment looks like going into their earnings, and I would say Apple's pretty neutral. Next up is going to be Amazon. Amazon, I believe, reports earnings on Thursday after close. So these are going to be, I think Amazon and Meta are going to be in the back half of the week, which leaves them obviously very exposed to the Fed decision, right? Because that's going to be on Wednesday, and a lot of the data coming in this week. They'll also be somewhat affected by the rest of the big cap, like mega cap earnings. I would say Amazon most, by Microsoft and like Google Cloud Services. I would say if Microsoft and Google Cloud Services do really well, that there's probably an opportunity to go like long Amazon in the middle of the week, but based on the options chain, there might be an opportunity to go like long Amazon into earnings now. It's trading pretty significantly above delta and gamma neutral. Gamma max is still pretty far out of the money at 173. Dealer delta's positive, dealer gamma's positive. There's plenty of short vol there, so there's going to be some downside protection. And call interest, while it's not picking up, isn't falling off. So I would say maybe expect Amazon to overperform going into earnings, and that might be an opportunity to play the upside on this in the first half of the week. But I would be very careful of the FOMC meeting. So maybe just like upside on Monday, Tuesday, and then before Tuesday close, get out. unless you think Microsoft and Google Cloud Services are going to overperform. And even, but if that's the case, and they overperform too much, that could be bearish. So I think while all performance in the cloud sector is kind of an unknown, that's probably the window of opportunity to go long on this. And I'm thinking maybe like a retest of the prior high. So we might see it move back up to like or I'm sorry, that's AMD. Um there's no prior high. Maybe it just stays on this trend. So you can see it move up like a few dollars over the next couple days. Hmm. 1 second. That would be. All right. I need to look at open interest on this. Yeah, so open interest is pretty strong all the way up to 162.50. And then not too bad at 65, 167.50. So if call side interest increases over the next couple of days, there's plenty of positive pressure. The downside's protected. I think we could see it move up to the trend or possibly break above it. So maybe it sees like 165 before earnings. I'd be careful, obviously, but yeah, it looks pretty good. I'll do AMD, even though it's not part of the Mag 7. It's crazy overvalued. I honestly, I just wouldn't touch this. This is getting way too much like Nvidia at this point. Um, yeah, I can check Starbucks too. Give me a second. Or just remind me after I get through the Mag 7. So AMD Friday closed back below Gamma Max. A breakdown of 168 on AMD is pretty bearish. Call interest has been falling off for a few days now. I would say that overall market sentiment going into earnings, at least in the options market, isn't particularly bullish. And seems to be more focused on selling volatility, as dealer Vega exposure has been increasing pretty significantly through that entire period of time. There's a lot of sold calls on Amazon on AMD at 180. So a breakout of 180 could see it squeeze up again. But it looks like participants don't really believe that earnings are going to match up with their current valuations. Intel has a big market cap. And I think it's weighting in stocks. Stocks is pretty big. I'd have to look. I don't know what it's at, but it's definitely not insignificant. All right. Google with earnings on also Tuesday after close. So where were we? So Apple, hold on, I want to write these down. Apple looks neutral. Amazon looks bullish. AMD looks a little bearish. This is Goog. All right, so interest on Google. we saw a pretty decent amount of Delta fall off, but dealer Delta and Gamma both remain positive. Google's trading about 153, about $10 below Gamma Max. All interest really only fell off on Friday, and it was picking up until then. So I think that's just some weeklies falling off. Charm remains positive on it into this Friday's expiration. I would say Google looks like people are expecting a pretty bullish outcome to earnings. This one is kind of in a weird spot, and I don't know. I don't know if there's really anything worth playing on this. At least not pre-earnings. I would say that it's blown out enough that if earnings miss, it could go down very hard. But it could go up a lot if they beat. So, yeah, this one might not have any kind of worthwhile play on it, especially with earnings being so early in the week. 3 U.S. soldiers killed in Jordan. Middle East conflicts poised to get even spicier. Possibly. I mean, I know Friday the Houthis hit a tanker and set it on fire. I think the situation was like they got the situation under control, but still a lot of risk to supply lines, right? And that's not going anywhere, and it's definitely starting to feed back into inflation and oil speculation, as we saw this last week. Oil now, like oil futures now at 78, and rising. So yeah, I think we're moving into a period where we start to see a lot more speculation on oil, at least volatility, if not just significantly higher prices per barrel. All right, Meta. All right, so Meta's actually dealer positioning moved net negative. It's kind of at its upside resistance right now. Gamma's been falling off, as has call interest since the 18th. We've seen call interest on it decline pretty significantly, despite price still going up. What day is Meta's later in this week? Yeah, so this one looks kind of bearish. Outside of the positive gamma, but I wouldn't play puts on it. Like I don't think it'll draw down enough before earnings that it's worth playing puts on. Possibly if Google's earnings are really bad, you could play like if Google's ad revenues are down, you could play like a sympathy put position on Meta, because it would affect them a lot too. And there might be enough interest here to drive that, but otherwise I would say it's probably going to continue to move up very slowly, along this uptrend into earnings. And we just need to see more call buying come in on Monday and push that trend positive again. So this one, there might be maybe the best play is something like short calls, similar to Apple, like short calls in the early part of the week. But out of the money. You definitely want to be out of the money. And then you're taking kind of a lot of risk that Google's earnings are good. Because if they are, we're gonna see call side demand pick up a shitload here going into Thursday. So yeah, while it looks bearish, there might be too much sympathy there with Google, which looks bullish. Yeah, well, part of the reason is calls are extremely expensive on Meta, very very expensive. But like I said, if Google does well, they'll be willing to buy them. I don't care about opening high debt REITs. I mean, it, it might be too early to start. Well, okay. Um, Maybe not. Maybe it's not too early to start shorting REITs. The FOMC meeting presents an opportunity to do so. I don't want to think about that right now. I gotta focus on other things. But I would say the March FOMC meeting is probably going to be far more impactful on that front, unless JPOW comes out extremely hawkish at this meeting and removes the possibility of a March or May cut. If that happens and we see the top end of the yield curve move up again strongly, um, not just walking up as we've seen it lately, but really like really a big move, then yeah, REITs will get hit hard. And O's a good one. EXR could get hit really hard. Especially for those of you guys that own it, think about maybe carrying a hedge through FOMC shit. Um, who else? AMT. I'd have to look at their holdings. I haven't looked at them in a long time. Yeah, TLT could have there could be a significant impact on TLT. I don't think it would be as big as REITs. Like if you find an over leveraged REIT with a high payout ratio, um, you can make a lot more money shorting the REIT than you would TLT. All right, where are we? Meta Microsoft is next. Okay, so Microsoft positioning on Microsoft is pretty stable and bullish. I will warn that Microsoft's options positioning is not that big of a driver of its price. It can frequently ignore the market maker in favor of just people buying the fuck out of the underlying. Um, but on the market maker side, I would say it looks pretty bullish. Um, Gamma's positive. Gamma has been turning down, but call interest has been picking up. So we might be seeing, just a lot of sold calls still on Microsoft at the 400 level, which we've seen for some time now. The 400 level has been a pretty interesting spot. If it exceeds the 400 level, those can squeeze. Oh, I gotta change the chart here. Sorry. I'm looking at two different charts. So at the 400 level, we could see sold calls squeeze off. We haven't yet. They're still there. They've been kind of compounding. Um, and so Microsoft might fall below 400 and kind of stay at that range into earnings. But the day before earnings, which I think is tomorrow we may see some of those short calls close, and if they do, Microsoft's price is going to spike because I think there's more than enough of them to drive price action up. So, maybe Monday calls on Microsoft, like Monday weeklies held into Tuesday afternoon. Might not be a bad play. Obviously, if it falls below 400, you'd want to get out. But if it stays above 400, then those short calls might squeeze off before earnings, and that could probably pretty easily push price towards like Gamma Max, which is at like 420. So that one's a little tricky, but a nice opportunity if it played out. So possibly weeklies. So possibly Monday, Tuesday. Weeklies at either at 400 or 405. I think there's a little opportunity in that play. I wouldn't sell calls on this. I probably wouldn't sell puts because you only have 2 days of decay. It's not really worth it. I don't think condors are a good idea here at all. Yeah, so I would say that there might be like a weekly call opportunity in the first half of the week on that. I could do Netflix too, but it still looks super fucking bullish. All the money that's been falling off of Tesla has been going to Netflix. Give me a second. Now Netflix doesn't have earnings, right? They've already had their earnings. Call interest was picking up on it into the end of last week. Some charm fell off and gamma fell off. Dealer delta still negative and slightly contracting. So I would say over maybe the next like 3 days, look for Netflix to make a top around here. It's above Gamma Max, and was above Gamma Max into close on Friday by about $10. So we're really looking, the two things you're looking for here are IV crush and sold calls at like the 475 level. As those pick up, this will get more bearish, but it'll probably take longer than this week. So we'll probably need to wait till we see it fall back below. That's tough. Maybe below 550 or 500. What's that at? 515. Man, that's really blown out. Short puts are closing. I'm gonna do Tesla next. Or well, after Nvidia. Trash. So Netflix is peaked, but it's not bearish yet. This could be, I think this might be a good opportunity for call like spread selling. Maybe above 575. That we have a little wiggle room and time to manage, but you'd want more theta on this. Like 14 to 21 DTE probably, or longer. But at a minimum 14 to 21 DTE so it can be managed. There might be some opportunity. Well, that'll lose out there, though. I would say there might be like an opportunity to do like a broken wing or like a like a skip strike butterfly on the call side, since calls are really overpriced on it. You could maybe target like the 550 level, which would be like the next point of mean reversion. And then that could be like a way to play the bearish side without taking on too much upside risk. Maybe something like this. Or that. Actually, I actually don't dislike that one. That's peak profitability at 550. And that way, 19 DTE. Yeah, and then you would try to close it at a test of 550. But this gives it a little bit of time to break down. You don't take nearly as much upside risk as you would take buying puts, because those are expensive as fuck. But something like that, or maybe just selling call spreads. I don't think you'd want a ratio spread. But maybe, yeah, maybe like a weighted condor or butterfly with more downside exposure. Then what's next? Nvidia. Just fucking straight line up. So Nvidia. So Nvidia rejected off of Gamma Max on Thursday, but Delta neutral dropped super fucking hard at the end of the week. Interesting. I'm gonna assume just from charm. This doesn't have earnings this week, just as a side note, but it'll be significantly impacted by sympathy and other earnings reports. I would probably just stay away from it. I don't think selling, even though it rejected off Gamma Max, I don't think selling spreads here is a very good idea. And I'm not really sure that selling or like buying puts would be either. Like going short, if it broke back below 590, then I might consider getting like some puts on it, or selling those call spreads above 600. But right now, yeah, I just wouldn't touch it, because you don't know what kind of like capex announcements the other Mag 7 that are reporting are gonna make, and all one of them needs to say is, oh, we're buying like another $1 billion in H100 chips, and Nvidia will go up $50. So I would probably just not fuck with that one. All right, Tesla, which Trash would know if they read my Twitter. So Tesla's in an interesting spot. and probably one of the things I'm most interested in playing this week, since it doesn't have a lot of exposure to the earnings of other tech companies, provided Apple doesn't announce like automated driving software or something like that. It found some stability on the 180 put wall where there's a significant amount of interest, and that should continue to act as a support. There's about $650 million in cover bid uh, falling off from last Friday's expiration, and the profit taking from those puts should drive some market maker buying of Delta going into the first part of this week. I think it's going to bounce a little bit, and I would be looking towards 190 to 200 for that bounce. Remember that the dealer is in a net negative environment, and so the was going to buy into rising prices. I think for a continuation to the downside, we're going to need to see longer dated put positioning build up a little bit more. So kind of just like a little bear rally here. The FOMC meeting could crush it. Positioning that comes in could crush it, but we would need to see a lot of positioning come in. And I think in the meantime, it looks like it's going to get a little bit of a turnaround. Excuse me. So it's not really a situation where I would buy calls, but maybe something where I would like sell puts. Maybe target like the like 180, 175 put or put spread. It might not be a great yield, but I think vol's high enough that it shouldn't be too bad. I wouldn't target like the 85, 80. Although the yield on it would be a lot better. There's too big of a chance that we just end up chopping here instead of going up. And that would be, if more bearish positioning came in, we could probably just chop and then grind down into the end of the week, and then maybe with FOMC or something we would lose the support. But if we don't see a huge amount of bearish positioning come in, I would say that this probably has $3 to $10 in upside range, maybe like 196. Something like that. So slightly bullish. Bear rally. All right, that's all of them. Actually, there's a few of you that probably want IWM. IWM's in a tricky spot. I don't think IWM is going to be very affected by earnings, and it did break through the downside of its trend on Friday, with PCE being a little spicier than anticipated. I think it would have benefited greatly from PCE being down across the board. Like if we'd seen core inflation down, we probably would have seen a bit of short squeezing on IWM on Friday, but we didn't. The hedges are still going to be there until FOMC though. Now, if FOMC indicates earlier rate cuts, this could rocket. If they don't, it's probably going to fail. So I'm still thinking about this, but I think some kind of straddle on IWM going into the FOMC meeting is probably a very good idea. It's extremely over leveraged. IJS? I'm not sure if I have that. I mean, I probably have data on it somewhere, but I'm not sure if I have it readily available. I'd have to load it up. Um, oh, I don't have it there. I'll see if I have it here. Nope, no data on it at all. Probably because it has no fucking options. Well, at least no interest on its options chain. Yeah, I don't track things that don't trade options. Not interested. Anyway. TWM's on Reg Show. Yeah, I expect that. All right, let me see. I ran a little long on covering the mega caps, but let me see if we got some nerds ready to hang out. I gotta mute him. What's up, guys? What's up, man? Hey.
Did it work this time?
No, it didn't work. I muted you guys before I joined the room. Yeah, you keep trying, but it's not.
One day.
One day.
One day. One day you're gonna push the wrong button.
I mean, I've done that before. So.
Yeah, I know.
I'm not
paying a penny over MSRP.
I'm not a good streamer.
Are you looking for us to say no? You're a great streamer.
No, I'm not.
Yeah.
I know where my skill sets are.
You know, the one thing that made that took you down a notch on my streamer totem pole was when you got rid of the dancing RC and Gherk stickers from your stream.
Oh my god, I still have those somewhere.
You should have one. At least we need to make.
Are you talking about the one with me doing the Carlton dance?
Yeah, we need that one. We need J-Pow and Yellen doing some sort of dance. Like maybe J-Pow doing the what's it called? Where the little Zoomers do it all the time. That stupid ass dance.
The one where they just move their arms in front and in back of them over and over again.
Flossing. We need J-Fresh.
Yeah, flossing.
We need J-Pow flossing. We need Yellen doing some other Zoomer dance.
I just want to see Yellen crip walk.
There you go. Pick that one.
Because she's a gangster.
She is a mobster. She's just like, well, it looks like I underestimated our Treasury issuance requirements, and so now I'm putting them back where they were.
How is that? How did that not just immediately impact credit markets?
Yeah, I completely missed this. What was the announcement exactly?
So a bunch of people were saying that the Treasury increased issuance, but I can't find anything on it.
Yeah, I couldn't find anything either. So
I mean, I don't know. Maybe the projection for QRA went up, but no one's gonna make any bets on that until it's released, right?
Yeah.
Yellen had a speech that day where she, rambled on about how great our economy is, and now they're using the reweighted healthcare data to try to say that healthcare costs are down instead of just reweighted. That one really pissed me off. Not too dissimilar from Biden's claims that inflation was down, right? Or J-Pow's similar claims. I think they might just be lying to us. Like, these people that we trust implicitly to guide the economy of our country are liars. And I'm still reeling. I mean, I believed wholeheartedly in our system until now, until this very moment.
I'm sure. Yeah. Yeah, I mean, I think yeah, we can call it lying or we can call it manipulate, gently manipulating. I think the Fed sort of knows at this point that they're not doing anything. Like they have no effect really right now on anything.
Yeah.
And they still believe, I think, that if the market believes that they have an effect, then the market will, I guess, what's the word when you try to like wish something into existence?
They call that.
Manifesting.
Manifesting,
They're trying
right?
to
They
manifest a better economy.
yeah, the Federal Reserve is trying to get the market to manifest the economy that they want.
J-Pow has one more trick up his sleeve if he really wanted to be the big swinging dick in the room.
OnlyFans?
No. Well, I mean, yes, it would definitely get a lot of subscribers, but
OnlyFeds?
only feds. But no, he could mark to market some of the Fed's holdings.
Ew, he wouldn't do that. Well, that's what I'm saying. Like, there's plenty of things he could do to actually change the trajectory of the market. He's just not willing to do those things.
I
Because
think
everyone's. Why would he do anything if everybody's praising him for what he's done already, right?
yeah.
I don't think the Fed really feels compelled to respond until the general consensus and the political pressure becomes big enough that they look stupid for not doing something, right?
So when inflation goes up.
Yeah. But it might even take a while after that, right? Because if inflation goes up, they'll just call it transitory again, or they'll find a way to say it's oil,
It is
or
oil.
supply shock 2.0. It'll go away, blah blah blah, right? So
I mean, supply shock 2.0 could see headline inflation moving back up to like the levels that we saw in late 2021, 2022.
yeah,
Or higher. High? That's gonna
I
be
mean
that's gonna be a hard one to explain.
that would be basically a complete replay of the 70s, right?
Yeah, it would.
That's a little bit too on the nose. I think it's gonna probably be different in some way, right?
I mean, I don't know, man. There's a lot of inflationary debt being built in the Red Sea right now.
We'll
And
smooth it out.
that's I don't know. Well, all right,
We'll adjust the weights.
we've got crude and oil, or we've got crude moving up, like West Texas and light crude and Brent are all up, right? We've probably didn't we cut off nat gas shipments
Yeah, we did. No,
Friday?
I think it was a nat gas project in Texas,
Oh, okay.
which was this whole fucking state government standoff over like a 400-foot stretch of the border.
Wait,
Interesting.
are you talking about the Texas thing?
Yeah.
No,
Oh shoot.
I'm not talking about the Texas thing at all. I don't know what the fuck Dork's talking about.
Oh
Oh, I don't think
yeah.
they cut any natural gas shipments, did they? Maybe.
The Biden delays consideration of new natural gas export terminals. Yeah, so
So
they
he's
paused the pending approvals of the for liquefied natural gas exports,
trying to
and
cut off
that was on Friday.
the money.
Yeah.
If you misbehave, you don't get any money.
Well,
You don't get your allowance.
they cited ecological concerns.
Uh-huh. Yep.
Yep.
America definitely has a long-standing history of caring about that.
Yep. Yes, we do. We're a very green and green forward country.
Yeah,
Totally
we're
not.
leading.
Totally not built on the back of the oil industry at all.
And just the raping of the earth in general.
Well, that's kind of a problem in the future for nat gas, because I know those two export channels were planned largely to Europe, um, which means Europe's going to have to at least somewhat reformat their supply plans over the next couple of years if that project's going to be delayed, which means more demand on like east coast of Africa, Madagascar natural gas, all of which gets shipped through the Suez Canal, and who knows how long that shipping route's going to remain stable, right? And then we're also starting to like, because like I think some U.S. soldiers died and stuff like that over the weekend. I think it was in Jordan. And
Yeah.
I know there's starting to be a little bit of concern about the hold on, I'm trying to think of the name of it. It's like the fuck, it's eluding me. It's like the Gulf of, not the Gulf of Aden, but like the area that leads into that. I don't know what that like particular
You
body
could
of water
literally
is
just
called.
make something up. Nobody on the stream will know anything of what you're talking about.
Fuck. Goddamn. You're right. I know you're right. But it's like where the Gulf of Aden ends from like the Gulf of Oman to the Gulf of Aden. There's like in the Arabian Sea there's a big gap. That area could be somewhat at risk.
Sure, you just cleared that up for absolutely everybody.
Yeah, yeah.
The
It
only
just means
place anyone in here knows
ships
is
need to
Djibouti.
go even further away from the Middle East than they currently are. Here, hold on.
It's,
I can just pull up Google Maps and show people.
I don't think so. That's a technology that doesn't exist
Exists.
yet.
Boom. Look at that.
Let Bart make the image
So
for you.
so this little fucked off area in here somewhere.
Why didn't you just say east of Djibouti or what? Yeah, east of Djibouti.
I don't know if people would understand that. This is where the Pickle Jar Resort is, over here in Djibouti. It's not just the Arabian Sea though. There's a name for it, poopy pants.
Can I say something really inappropriate? Put the map back up.
Yes.
Oh god.
Because now I can't unsee it. This looks like a hummingbird is gently licking a man's genitalia. Right at Djibouti.
This is a high quality economic analysis I'm here for.
Thank you, Dr. Gingerballs, for that assessment.
Yeah, I see it.
You can't unsee it.
Time to write a listicle on the 10 reasons why that's bearish.
That's foolish.
As long as you post it to Twitter, so me and Jay Fresh can retweet you.
Yeah, that's Dark. That one's all you. But I will retweet right away.
Oh my god. I'm doing the great social circle jerk network.
But see, now everybody's gonna remember all of the geography of that body of water now.
Yeah, which is what matters. Anyway, continued issues with the supply chain there. And then obviously higher demand from Europe on natural gas could create kind of, or exacerbate the bottleneck. So, yeah. That's really what mattered.
Yeah, I mean, it seems like it's not going to end anytime soon. It keeps getting worse.
I mean, it's, as like war of attritions go, they're still not spending any money to blow up ships, right? And we're going to spend shitloads of money trying to chase them through the desert.
Well, so here, Girk, here was a new development. Was that over the weekend? Yeah, some troops in Jordan were injured and killed by an unmanned drone strike.
Yep.
And Biden came out and said that it was extremist Iran-backed militias.
Hmm.
So this conflict may be escalating away from regional and towards international, but we'll see. I mean,
That's
Yeah, I mean,
still.
I think
I think
that's
Iran's still in the general region, but yeah, I agree.
well, if America gets involved, it's international. I mean,
We're already involved, right? But right now it's like a
yeah, we're
proxy
there.
war between the American and British Navy, and a little bit of the German Navy, and Houthi rebels and stuff, right? But
Yeah, I mean, we're
if
at
Iran
war.
gets
We just
involved,
haven't
then it's
declared
like
it.
a real war.
We just haven't declared it, but we're over there
We're just over there
shooting
picking
each other.
fights with anybody that wants to start shit.
But that's, I mean, I think that's the thing with the markets. The markets just feel numb and invincible, right? I mean, we're Russia and Ukraine, nothing, market moves on, right? And so like you get all of these things, and it's just like, well, that didn't affect the market, and this didn't affect the market, and so you get to the point where people just assume the market's invincible and nobody cares anymore. And I think that's the market has become extremely complacent and undercounting all of the risks, literally all of the risk that's present now.
yeah, like the perfect evidence of that is after we had several banks fail, we had a war between Russia and Ukraine break out, we have this Houthi rebel shit, and in the midst of all this, the market went, "Hey, you guys, here's a bunch of short vol ETFs. Have fun."
Yeah, and then just like a bunch of people who are like, you're a retard for thinking that these were risky things that you should be concerned about. Markets go up, dummy.
Yeah, that's
Uh,
just ridiculous.
yeah. Well, they do, right? I mean,
Yeah,
I'm not
they
gonna,
did.
yeah. I don't want to sit by and say markets don't go up. They do go up. It's just that sometimes, on occasion, they've gone up too much and then they go down. It
Yeah, but then
doesn't.
you
It
just
doesn't
don't
seem
you don't open your broker for a while, and then when everyone seems happy again, you open it and see what it looks like.
interesting. I like this stress-free approach to investing that you're proposing. So you're saying I
Yeah, you just
just
take your
buy SPY, and if it's red, don't look at it.
yes.
Interesting.
Literally can't go tits up.
Can we backtest this?
Yeah, what you do is you just like basically create a trading strategy that buys, 2 shares of SPY every week in perpetuity.
Oh man, I hate everything about that.
That's literally what people do, dude. I mean, that's a lot of people's fucking 401ks is just literally just buy SPY.
Poopy Pants says there's an entire industry based around that. I don't believe you, sir.
That's
I
insane.
believe
How
it.
could
That's
there be an
crazy.
entire industry?
How would anybody make money? What would what
Which are
like
you
you'd
implying?
lose? Are you implying that people would give away a significant portion of the very little money they're already making off of this?
Yes.
Holy shit. So
They
it's
don't know any
like
better.
not making money at all.
Well, they're making money. It's just they're making less of it, right? So yeah, let's say the S&P 500 goes up 10%, they make 8%, and then the people who bought the SPY shares for them make 2%.
But what if they bought the SPY shares for everybody?
Who do you mean like their financial advisors? They do.
Is that what we're going to call them? Financial
What if?
advisors? Do you think they're
That's what they
qualified to
are.
advise people financially?
The people who buy the SPY
I
shares
mean,
for
there's
401ks.
gonna have to be tests. We're gonna have to make some tests.
We
Hmm.
have tests, and they're things like it's things like if this options price is $5, the strike is $2, above the current spot price. Is the option in the money or out of the money?
Nope, there's
Hold on.
no way to tell.
Let's
There's
just
not enough information to determine that.
this is crazy.
Yes,
This
there
whole
is.
thing is just nuts. give me a second here, because what I think you're saying is that over a period of time, if you consistently buy something and it's up 8% every year. Now, what do you do when it goes down 20% every 4 years? And then
Uh,
starts.
This is when you don't open your brokerage. I
Okay,
feel like
you
you're
don't
not
open your
understanding
brokerage
this.
here, but here's my question. Do those people give you your 2% back? Like, do
No,
you get a
why would they?
refund when
It's
this
gone.
happens? So
no,
it goes down 20% and then wait, it just so you just start all over again.
you just keep buying, and then you'll average your dollar cost averaging. So eventually, it'll go back up, and you'll be even more up.
Okay, well
Yeah.
here, look at this simple
Just
chart that I've laid out. Can you show me where along here you're up?
Uh,
most of the time. I don't see
a
what
little
you're
bit.
missing here.
You're up the entire time because you're not looking at it.
Oh, okay. Now I get it. That makes more sense.
Also, you left out the dividend, so you're
Oh,
chill.
yeah, that's
What
true.
dividend? There's no dividend on the S&P. Are you kidding me?
Do they just take that too? They just say, "Oh, there's no dividend. It just appreciates in value."
Well, the dividend yield is it sorely
Hold on. So
lags.
you're saying like if I go look at the S&P 500 right now, I'm going to be able to see a fairly similar pattern to this over the That's crazy talk.
I mean,
This
the
this
thing is,
defies
that-
everything I've ever been told about investing.
so just remember, Girk, Nancy Pelosi has stocks, and because of that fact alone, they're gonna go up.
So you're saying over the last 2 years I wouldn't have made any money. Oh shit.
Yeah, you would
Uh,
have. Look, it's higher high.
if you bought anywhere in the last 2 years, you would have made money.
But what if I bought but I've been buying every week forever.
Yeah, you'd be up right now because we're at all-time highs, guaranteed 100%. Every single person who bought SPY right now is up.
But what about my fees?
With fees, yeah, you're still up.
Hmm. And if the market goes
And
down
even if you're
3%?
not, there's no math to even figure out what effect the fees have. You're just up.
Yeah, exactly. Yeah, why do you care?
I mean, it's pretty impressive. Making
Here's
$60 a share over 2 years? Not bad.
here's the other great part. Wall Street can sell puts to pump the price up while you're buying at these wildly inflated prices, which essentially is a way to extract the money directly from your investment account into their pockets.
Well, I want to make sure they get paid for their hard work.
Yeah. I mean, they're helping ensure that the market keeps going up.
But then it's going to go down again.
No.
Oh, because
You
I'm
just
not
don't
going to
look
look
at
at it. Okay, yeah.
Okay, you're getting
All
it.
right,
You're
I'm
getting
starting to
this.
understand.
Yeah, you see, so here's an easier way to understand it is just like the investment strategy also involves having a job at 7-Eleven. So
So you
the
work an
entire
extra
time the
like
market is
20
moving,
hours a week?
yeah, so
This is like a part-time 7-Eleven position.
no, this is you're working 60 hours a week at 7-Eleven.
Okay.
And so during any time where you could actually place a trade or tell your financial advisor to do something, you're working.
Oh, shit. I
You
see.
see? Yeah,
Yeah. Well, why
it's
would they
very
want to
different.
keep me so busy?
Well, they don't. They want to keep you busy because then they don't have to hire as many people and give them like very shitty healthcare, and they also don't pay you enough, so you need to work the hours.
I see.
And
I
then
see.
you take
But I can still afford to buy 2 shares of SPY every week?
okay, so it's a little bit of a stretch there, but you do take your extra
Fractional.
Are you
after
saying I'm going to
living
have to
expenses.
reduce my total SPY allocation?
So after living expenses and everything else, you take that extra $10 that you have and you put it in your 401k.
Oh, okay. So
And then
so
you
wait,
buy
so
0.0.
So you're saying, hold on. So you're saying back here, I used to be able to buy 2 shares of SPY a day. Like, say back in like 2015 when I was doing great, you know? And then the amount of SPY I can buy every day keeps going down, or every week keeps going down over time.
Yeah.
Okay. What about the value of the money I used to buy the SPY? Is that going up?
No, that's going
No,
down.
that only
Uh,
goes down.
that's why I
So
have to
luckily,
work more, right?
That's
well, no,
and you have
so,
to put it
so
in the 401k because it'll
Son of-
go to zero if you
But my
don't.
employer's they're gonna match that at a consistent rate over time, right? They would never maybe give me slightly less. Right? They're always gonna 2x it.
so Girk, here's the beauty in the strategy too, okay? Because SPY is naturally parabolic, right? And it's so SPY is controlled by the 1%. They're getting exponentially more rich. And what that leads to is SPY buying itself and pushing itself up as the companies buy themselves. So you don't
Actually, yeah,
care.
they're literally buying themselves right now.
Yeah, that's a lot.
I think it was last week, we
So
actually
wait, the
finally
companies I
agreed.
invest in are taking my old money that was worth more, and they're using it to buy themselves now at current all-time high prices.
Yes.
Yeah,
I'm and I assume that they're doing that so that insiders can also buy more.
no, it's so they
Sure.
can sell
Why would
Eh,
they? But why would anybody sell the company they
because
work
they have
for
to
and believe
eat. They
in?
have to eat. They have to eat.
Oh
No,
shit!
they have no. See, JFresh, you're fundamentally wrong because what they do is just they take an equity line of credit on their shareholdings and they only sell when they need to for tax purposes.
Yeah, that's fair. So
Now,
sometimes they
now, none
just
of these
don't
companies
don't.
would never do something like add debt to my equity in order to buy those shares, right?
No, they
Well,
do
that's
that
how see
too.
that's the
Yeah,
beauty, Kirk, is
Apple's got like I think it's up to like 86% debt to equity now. They like decimated their cash holdings as their
see, Kirk,
revenues are dropping. It's for the good of everyone. I mean,
You
they're
guys are
yeah,
like
saying a
the
lot of
beauty.
things that make me think that I'm not making any money over this period of time where I should be making money. Is
Well,
it
what's
just because I
happening with
have
your
my eyes
holdings?
closed always?
Yeah, so what's happening
yes.
with your holdings is this is the alternatives era, Kirk, okay? So what's happening is your assets have been bought by themselves and they're making them better, okay?
So my assets are buying themselves with debt,
Yes.
and that makes them okay. Okay.
Because
Yes.
debt is good, right? This is so in our current economy, debt is good and it is only ever good. It is never a bad thing to have debt. And so that's why when you see companies levering to the tits on it, it's
Well,
a good thing.
well, hold
That
on,
is
hold
growth.
on. What if that debt exceeds the growth? Like, I know the interest rates are pretty high right now.
That's just you being scared and being a
Oh,
perma bear. The
I'm
debt
You've been
sorry.
is
listening
for
to
growth.
Bud,
It's for
okay?
future
You know
growth.
what it was? I
More
opened
debt,
I
more
opened
growth.
I opened my eyes for a second and I was like, whoa, that
Yeah, and
should
look, all-time highs.
yeah, it's beautiful.
Yes.
I've
No,
I'm
yeah. So
clearly
don't leave with
rich. I
Bud.
should go buy some things with all my newfound wealth.
No, 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 no. You're never supposed to sell until you're on the precipice of death. Okay?
Oh,
So
Yeah.
don't sell. Don't fucking sell, you goddamn shill. If you sell, the whole thing falls apart.
but, but okay.
That's not money for you to use. It goes up,
Oh,
but you're not supposed to sell it.
it's
You're
someone
never
else's
supposed
money.
to put that ever.
So I just gave my money away?
No,
No.
no, you didn't. This is an
You
investment for
own
the
it.
future.
You just
Oh.
don't ever use it.
Yeah.
Hmm.
No, when you're about to die, what happens is you stop working and then you take little tiny little piddly bits of it out every once in a while, and then when you croak, your kids get to go and sell it and then, become drug addicts and gambling addicts.
That's all what I've always wanted for them.
Okay, well then, yeah, perfect. This is the perfect setup for you, bud. I mean, come on, why are you not just full porting SPY right now?
I'm I'm about to. You guys have sold me on
It's great. Yeah. No,
it.
this is it literally can't go
I
tits up.
mean, I mean, just look around. This is one of the largest times where the companies are buying themselves. They are more bullish on themselves than they've ever been. You should buy with it. Buy when the smart people are buying.
But the
Yeah.
insiders are selling, so shouldn't I be selling? Why are they
No,
allowed
no,
to sell?
no.
They're just paying their taxes, dude. You don't want rich people to pay taxes now?
Well, why are their taxes so high?
They're not.
They're not. They're
paying,
lower than everybody else's in terms of percentage.
yeah. They're paying like 1% tax rate.
But I pay
So it's okay.
20%.
We want them to do well so they buy more of themselves, right? I mean, it's just simple logic, but you can't sell, Girk. Sell is not in the vocabulary of this strategy.
So as long as I put my money in, never take it out, ignore the debt issued in the name of the financing that I've handed over, and never sell, and continue to pay my fees like a good citizen and my taxes at 20%, and I don't worry about the value of my money over time in respect to inflation, then at the end of all of this, I'll be up.
Yeah,
Yeah.
and you get to live in the greatest economy that the world has ever created.
Okay.
So, and here's the thing, Girk. If you do go to sell and you're not up, then all you have to do is close your eyes again, and whatever your political affiliation is, just blame everyone else that doesn't have your political affiliation for you not being up right now.
Fuck those people.
Yeah, they're
Yeah.
assholes. Fuck those guys.
Yeah.
But
Yeah.
it's their fault, and it's because they sold because they're a bunch of shills who listen to the FUD.
Yeah. Yeah. You know what it is?
Easy.
It's the gay amphibians.
Lizard people. It's
Yeah,
Brian
lizard.
Moynihan.
Brian Moynihan's a lizard person.
He really is. All right, so now that we've covered the best trading,
Okay, yeah, I think
Okay.
we've taken
Yeah, I
that
mean,
pretty far.
I think we've given everybody as much alpha as they could ever use in their lives.
an alpha of 1, I love it.
Yep. It's like a savings account that loses money over time. We really leaned into this one pretty hard. I think it was worth it, though.
I can't do this anymore.
It's almost as good as that time that we went out. We went full bolt on crypto.
Oh, dude, yeah. I mean, if you adjust for inflation, is SPX really even up?
No. no, it's fucking not. If you look at market cap, it's also not up.
Actually, I think last week on a market cap basis, I think we hit the new all-time high.
Did we? I know we were a little bit off.
Yeah. They literally, like, over the last 2 years, all the companies in the S&P bought up like almost 2% of themselves. Kind of crazy.
Yeah. The insider sales spiked and bond issuances spiked as soon as they were done with buybacks. We have I don't know if you saw my post. I know you reposted it, but I don't know if you actually read it. But issuance is the highest in January this year that it's been in the last 30 years of any year. So we've already exceeded all bond issuance over the last or we've exceeded the high of all bond issuance over the last 30 years in the first month of this year. 150 billion in corporate debt issued already just in January.
I know we've talked about this in the past. I'm going to ask a semi-serious question because
Okay.
I want to make sure that I'm not like just becoming an insane person because I know it's happening and I'm trying to prevent it.
Yeah.
It seems like companies who are public and issuing shares should not be able to sell bonds. That seems like cheating.
You're saying they shouldn't be able to sell the liabilities of the company to someone else
Like the whole
after
point
they've
of going
promised
public,
the equity of the company to one set of people.
Yeah. Yeah. Right? I mean,
But
I'm not crazy.
how would
right?
they grow, man?
They would sell shares.
Or make a product that makes them money?
Yeah, well, they do a combination of here's our plan for growth. Now that we have put together this very intelligent plan that's compelling, that will compel you to buy more shares that we're going to issue to then implement this plan, and then it will
I need to
grow.
find this conversation that I had with this guy on X. Hold on.
Oh yeah.
I gotta show people
I
that.
mean, I just want to make sure I'm not being crazy, right? Like this, it seems weird that
I
they
don't
can
think
sell
you're
shares
being crazy.
and bonds. That seems like double dipping, right?
You know, it's the thing. I mean, the leveraging to the tits, right? And it's not that they're even issuing shares, right? They're issuing debt and at the same time buying back shares.
Hold on, Dork. We have to play this out here on the screen. Who do you want to be? Do you want to be Pifi or Bacchus?
I'll be Bacchus. I love being
So
dumb.
Bacchus was making
Okay.
the argument that we haven't even seen AI companies go public yet. So we're only in the infancy of the AI bubble.
We haven't seen one go public because they don't make money.
Irrelevant. I love it.
Irrelevant. Oh, only like 35% of the NASDAQ was profitable. Sounds like we should only be financing 35% of companies. You strike me as a dividends over buybacks guy. If you could buy their shares, you should make a profit. The alternatives era.
We buy assets and make them better.
Oh my god, dude! I hate this. It all happened
Bro,
after
I
Harambe
was
was killed.
telling Dork, I was like, when does this end? We've got alternatives era. We've got price to innovation. We've got shitheads like this. Everybody's lost their minds, and Dork was just like, it's not going to go down until unemployment goes up, and we're not even close.
Yeah, I mean that's the way I see it. Like, I mean,
If you can dodge a dividend, you can dodge a profit. Oh man. Yeah, so I mean, I think we need to throw away the idea that publicly traded companies should be profitable, and then you can understand why they need to issue debt.
Speaking of unprofitable IPOs, isn't Reddit looks like it's about to try to IPO again.
Is it?
a
And
half
they've
valuation.
never been profitable, right? Right?
I don't think so. I mean, but
5 billion valuation, I think.
five
Yeah.
bill really? Well, at least all those Reddit mods will finally be able to dump their inside shares, right? I mean, I'm
Yeah, I don't
sorry,
know.
Reddit employees.
They're not. That's the funniest part about mods is they're just power tripping losers.
It's starting at
Isn't
15
isn't
billion.
Carl a Reddit mod?
They should have gone public during the meme stock era.
Yeah.
Like at the
Isn't
peak of
Carl
the
a
meme
Reddit
stock
mod?
era. I mean,
I don't
yeah.
think that's
Yeah.
a mod.
Yeah, that sounds about right.
Yeah. I'm also
Oh yeah.
well, I have a subreddit. I don't know if I'm the moderator or the
That's
admin.
probably different. That's
Okay.
probably different.
I can
Yeah,
moderate you
probably.
guys on the subreddit if you want to be special.
Ooh, make me a mod. That'd be
Mm,
great. And I'm just not gonna do anything with it.
yeah, I'm gonna be honest. I don't really go on Reddit anymore. That was so 2021.
So JFresh, if you want to get frustrated, go on the economics subreddit. It's basically Twitter.
Well, I mean, I don't need that twice.
It's even worse on Reddit though because
Is
there's
Paul
no
Krugman on there?
Probably.
what was that?
It's probably
Does
his
he? Does
subreddit.
he? Does he post?
A lot of people on there like to make normative statements and then use those to make economic projections, and that's like literally even for economists that's like the worst thing you could possibly do is say things like inflation is cooled, employment remains tight, therefore the economy is going to do great. That's like that's what they
Whoa,
say.
those are some very specific statements. You can't do that as an
Like,
economist. You need to say things
literally,
like inflation
literally all the
appears
economists are saying that.
inflation appears to be cooling. That
Well,
way
what you
it's
say?
that way if inflation heats back up, you can be like, well, it only appeared to be cooling, right?
Yeah.
Well, yeah. No, the real economists who get paid money say if inflation remains within expectations and GDP remains high while the labor market continues to stay strong, then there is a chance that the economy will continue to do well.
Maybe.
That's how you work. I'll take my $100,000 check now, Girk.
I'm
You
sorry,
pay
you're
me a
not
lot
getting
more
paid
than
for the
that.
speaking arrangement. The proceeds are going to charity.
Oh, okay. Well, I'm okay with that.
Okay.
Do I get to pick the charity?
No.
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 Okay.
But it's
Is the
not.
charity your brokerage account?
No. I'm not sure there's going to be any proceeds, but if there are
How far away? How far away is Russia from IPO? Probably pretty close. They haven't
yeah,
been profitable
when's
for
the
a while.
ruble going to go live?
24-hour trading on Robinhood. Actually, the probably already exists. Just the forex market.
Oh, dude. 24-hour trading on Robinhood is so dumb.
Oh yeah, that's right, B Taco Man. Dork, proceeds go to SPY shares.
Oh, yeah.
Yeah,
Okay, perfect.
yeah, you got to buy the SPY shares.
Well, once you're a billionaire in 30 years, you can not sell them and then tell me how much money you made.
Yeah. Huh. What if, just one last thing on that. What if I sell my things when they're green?
No.
Then I don't ever have to close my eyes.
No.
No.
Shut up.
Sorry.
I don't understand. How are you not understanding this? Every single economist and trader on the planet has analyzed every strategy you could ever possibly deploy on the market and shown that it will always underperform just owning it forever and never selling it.
Shit.
Yes.
All right.
Stocks go up, dollar goes down. That's how it works.
Your money goes in and never comes out, but it looks like it's going up.
Yep.
Should someone maybe teach me, or should I learn on my own how to maybe protect myself from?
No.
Get an advisor. You're gonna screw it up. Just get an advisor.
All right.
Get an advisor. They're going to buy the SPY.
They've taken the tests. Just let them do it. That's why they exist, to help you.
Those tests sound really hard. They have complex names.
Yeah, well,
they're tiered.
One of the hardest things they did was performing a keg stand in college for 30 seconds.
Jesus Christ. Anyway, what are we looking at this week? Let's stop fucking around and dive into it.
A whole lot of stuff. That's what we're looking at.
There's so much going on. I just don't even want to look. This is one of those weeks where I just don't even want to look.
There's so much shit in the first part of this week. We've got six this week. We have 5 of the remaining Mag 7 reporting between Tuesday, Wednesday, Thursday, right? We've got an FOMC meeting, which should be at least pretty interesting. I think we have PMIs. I know we have JOLTS. We have consumer confidence. We have Chinese PMIs, which are going to be probably a big deal. We've got the ADP German inflation, Chicago PMI, jobless claims. Oh, non-farm on Thursday, not on a Friday. Oh wait, no, non-farm productivity is on Thursday.
Ooh, for this
quarter 4.
For this month, for quarter 4. Okay.
Yeah, it's expected to come in at 2.5 versus the prior 5.2.
I mean, that's that's all you need to do, right? It's not inflation; it's productivity. Problem solved.
We have ISM PMI, And yeah, then NFP in Michigan. Factory orders, I guess, into the end of the week. But yeah, the rate
It's gonna
decision's
be
Wednesday, 2 p.m.
it's gonna be a
It's
big
just a
confusing mess.
shitload of data.
We also had the Fed, the Treasury quarterly issuance guidance. I think on Wednesday also.
So here's what's going to happen heading into it: is IV is going to tank. How
You
about
think
that?
That's what's crazy
Ivy
is,
down into
I mean,
well, I mean, my VIX futures that I opened on Friday won't like that.
even people that
Hopefully.
are just pretty vanilla traders are like looking at puts and being like, these seem way too cheap for what's about to happen.
I mean, calls
This
on
is the
QQQ
tricky
are
part.
technically free, right?
Yeah, pretty much.
The thing with like puts though, like, and so this, I was thinking about this. The thing with puts, and like, you would think to yourself, well, if a contingency of traders decides to go long puts, it's going to spike IV pretty hard, right? But the thing is the like, that's like putting like a garden hose into a river, right? Like it's just not going to do shit until this whole crazy amount of short vol volume like actually stops, right? Like these crazy short vol funds that all got, are just getting money dumped into them. If that money stops and if they sustain heavy losses, then yeah, we're gonna see vol spike. But until then, it's just nothing's gonna fucking happen.
Yeah, they
Yeah.
sell any vol that pops up. So I kind of like I was kind of thinking about it earlier this morning as like sound feedback, like from a gain amplifier or an op amplifier.
Mm-hmm.
So like you have a microphone and a speaker, and the market is singing into the microphone, and it's coming out of the speaker, and they're not really interacting that much. But as you short vol, you are turning down the volume of the song going into the microphone and turning up the gain so that it's still just as loud coming out of the speaker. And eventually, if you sell enough vol and turn the gain up enough, the sound coming out of the speaker will feed back into the microphone and cause it all to blow up.
Mm.
So
Interesting.
short vol will eventually create long vol.
Yeah. Well, I mean, we're already seeing that, right? As we trade above
Yeah,
Vega neutral, and we see the MM going long vol every day because so much short vol is sold.
yeah, yeah.
But yeah, I understand that also happens on a longer time frame at a bigger level. I don't know if we're quite there yet,
I don't
but
either. I don't
yeah,
either. And there's not a great, I mean, to know how close you are, you have to know the gain, right? And it's really hard because then you have to go to, the indexes and all the individual stocks that make up those indexes and look at the sensitivity of those to price, which requires, lots of depth, order book depth information,
yeah,
which includes also trade people who are hiding their orders. So it's hard to even know what those sensitivities are. So you can never, the amount of information it would require to know, where you are in the cycle is not really feasible for most people to get. Very few people on the planet have all of that info.
yeah,
Um,
or
but
almost none.
the mechanics are there and understood, I think.
Yeah, I agree with that. This is why Cam missed his window, huh?
Oh, I don't know. What's the window now?
He
I
shipped the
think
blog
he
post in
moved it
February.
something. I don't know where he moved it to.
February?
February.
Fab.
Yeah. He's just gonna keep moving it a month forward till it happens.
Yeah,
Okay.
basically.
Whatever. The dude's a cum croissant. I don't care.
I don't really have much to say. I don't know that I want to get into it.
Yeah,
You don't because they engage with you.
I never really wanted him to engage with me. I just didn't want to be called a plagiarist.
yeah, I gotta kind of agree that that was fucked up. but I think we're getting close to something breaking because it's already starting to break on QQQ.
Yeah.
And that the like feedback to that and into S&P can't be all that delayed, right? I mean,
Well,
oil can
so
act as a stabilizer a little bit, and that keeps going up. But I mean, we've all looked at the arbitrage on QQQ over the last week, and that's not that's not good, right? Like the
so
Vega exposure or like vol exposure on the on QQQ is like turning. It's been just turning massively more positive.
so I was thinking about it, and I like, we talk about SPX being above Vega neutral, which it still is as of
Yeah,
Friday, right? That alone, right? So this is kind of what I'm thinking, is that like with these short vol funds doing what they're doing, what's going to happen is, the market's going to basically hover above Vega neutral until it breaks down, and then, have a pullback down to Delta neutral, as these vol funds sort of reposition and stabilize, and then we're just going to go straight back up to Vega neutral.
yeah,
Um, but being above Vega neutral, like I kind of want to discuss a little more, like mechanically what that means, right? So like when you're, above GM, right? If you buy $1, the market maker sells some fraction of that dollar,
yeah.
right? When you're above Vega neutral, though, it's something a little different.
Yeah, well, it kind of. So I think everyone here is pretty much understands that when we're above gamma neutral, right? The market maker is buying strength and selling weakness, right? So or buying weakness, selling strength, right? So it's the is buying the downtick, they're selling the uptick, which creates a lot of stability and lowers realized volatility, right? Um, but kind of what you get with this is that you're by selling so much short vol, you're forcing the market maker to hedge vol on the downtick because the is long vol as opposed
Right,
to,
right. Yeah.
yeah. And so
It,
um
it's
it,
like
it
it's like gamma, right? Where, they sell into, like you said, they sell into strength, buy into weakness. It's like the same thing, but for volatility, right?
yeah, well,
As
it
vol
kind
goes
of
down, they buy.
inverses it kind of, well, you know what it actually does is it negates the effect of being in a positive gamma environment, right? Because now you have the actively shorting the downtick and the uptick.
Right. Well, they're just,
Yeah.
yeah. Go ahead, Jay Fresh.
There's also another effect too, in addition to, all the ones that you guys are talking about here, is that market makers aren't always neutral.
Yeah,
Uh, if
yeah.
they're up, they're not going to hedge away profits, right? And so if everybody's short options, that means the market maker's long, right? And they're long a shit ton of calls right now that are all in the money. um, so if you sell a bunch of puts, they're not necessarily gonna buy to push it up, right? And so selling puts doesn't do anything. And if you're using that as your mechanism to push the market up, it's going to collapse on itself. So that's also occurring as well because the market is pushed so far to one extreme.
Yeah, we really see that as like we bounce between gamma max and vega neutral over this last week, right? Because when we hit that gamma max point, that the gamma from those zero DTE calls that they're buying with the puts falls off, right? Like the market maker is no longer going to hedge gamma to the upside, right? And then, so immediately the market maker is going to start hedging all of their long puts, right? And you get this like rapid downside. And then, bulls are trying to come in and stabilize that. And we just keep kind of bouncing between one hedge neutralizing and then the other. And that
Yeah,
should
and
theoretically happen in like a tighter and tighter range.
This is how bear flags form, right? Ascending wedges are basically a manifestation of this in some cases.
Very
yeah,
gappy, volatile ones, but yeah.
yeah.
But the
I mean,
problem with
time.
this is because the momentum of capital is to the upside on the zero DTE calls, is you end up building a much longer dated, much larger short put position, right? And so long after the calls are all dead, all of those puts are still there.
Yeah, and I mean, really, what the people who are pumping the market need is they just need more time to reposition upwards, right? So they've got to wait for their short puts to fall off so they can sell more because everybody, it seems limitless, but people have limits on how much they're willing to sell and how close they can sell it. And, it does look like people aren't really willing to just start selling closer into the money. I know some people are. There are some in the money puts that have been sold even up here. But they need time to let that fall off so then they can reposition at the next, five delta or -5 delta.
Well, if we think about it from like
Um,
their book perspective, the puts have a lot of delta, right? And the calls have a lot of gamma. And as long as they're buying,
well, yes, sort of. I mean, the ensemble of puts, because there are so many, have a lot of delta. The individual puts are very out of the money
yeah,
and
yeah, they are
and
they are
are
not
very
selling them.
low delta. So they're way out on the tail, but there's so many of them that there's a significant amount of delta
Yeah.
that gets
But
sold.
but
And then
also, I
yeah,
mean,
and
like
then
part of this is that you use gamma on bought calls to drive the delta
yeah,
exposure
zero
on the sold
DTEs
puts
are all
down, right?
yeah.
So as you move
This
up, your delta exposure reduces, and you keep trying to keep your gamma exposure in excess of that delta exposure, but eventually you're going to run into a wall like gamma max where delta exposure no longer drives the price higher, right? The effect of your delta is no longer pushing you further from your delta, or the effect of your gamma is no longer pushing you further from your delta exposure. And then as the market falls, your delta exposure increases exponentially because these positions are much more leveraged on the sold put side than they're like 2 to 1 sold puts to calls, right? So, um, yeah, when you hit a limit for
yeah,
gamma,
both in
right?
number and in leverage, yeah.
Yeah,
Yeah, the
and
leverage
then you've
ratio right
got
now for
all of this massive downside risk, and really no way to push price back off of it. And what they did last time was they just sold more puts, right? Like as we fell, they
yeah,
just kept selling more and more and more and more
they kept it
puts
all open and just sold more.
until the market finally stabilized in October, right? So they just kept expanding and expanding risk, until and that's why we like saw vol barely go up despite the market dropping 13% between August and October.
Yep, they fought it the whole way down, and then
Yep.
all of that fuel was there ready to push it back up. And I think, um, the way that market makers hedge does depend on the rate environment, right? It's very important, and I think the dramatic change in rates at that point uh, had a huge effect on hedging, right? And in particular, it allowed the market maker to hedge sold calls less. So they have to be less short. So basically, that huge push up that just seemed to never end It wasn't, longs just all piling in and everybody making a shitload of money. It's just a market maker just trying to stay delta neutral, or market makers trying to stay delta neutral in a changing, uh, a changing
Rapidly changing.
rapidly changing interest rate environment. And ironically, all the people who own stocks are now in all these, like leveraged things that sell calls on the stocks they own, right? So they all got blown out.
Can we
The
can we
longs got blown out too.
can we talk about the second derivative that matters that's not Veda?
Charm?
No, not Charm. Rova.
I didn't know we were ready for that.
I don't know. It's cool. I did buy those Rova
Yeah.
calls. Remember those?
Yeah.
I still have them. my 2027 SPX 12,000s.
How are those doing?
Shit.
Those are just going to straight up go in the money, right?
I mean, at this point, they might, right? I'm okay with that. As long as we keep getting 20% a year for the next couple of years.
Yeah. I mean, I could talk about the mechanics of row if you want. Yeah.
I
I've been
mean,
trying
I
to
don't think we need to
not
go.
overload people.
Yeah, I don't think we need to go too deep into it, but there is a realized effect on hedging from the market maker side, because they're carrying a large very row exposed book of options. So when you see dramatic shifts in interest rates, their hedging is affected, right? Like
Very importantly, what are the interest rates that are changing relative to where's most of the positioning?
yeah,
Okay,
the
this
out
is
of
where
the
it's a,
money.
so no. So think about what everybody's talking about, and everybody thinks it's so crazy that the market is pricing in what?
It's six and
How
a
many
half
cuts are
rate
they
cuts.
pricing in?
Yeah,
And when and how soon are they pricing them in?
this year.
Where? Even up to March, right?
Yeah, yeah,
Where's most of the positioning in the options market right now?
March.
March.
Yeah,
I don't think it's a coincidence
that's not.
that, yeah. And I personally believe, I don't think the market is stupid enough to think that it's worth betting on 7 cuts, right? I think this is a function of such an unbalanced and violent move on the options chain and equities that it is spilling over into other interest rate products in ways that are seemingly bizarre and don't make much sense.
I could see using like swap lines or Fed fund futures to hedge off huge amounts of like row exposure in an
Yeah,
book. Yeah,
yeah, yeah.
that doesn't. And if it's
I can't,
yeah, okay.
I can't prove any of it. I'm just trying to put
I
together
mean,
dots.
you could, but fuck doing that.
Yeah.
Like
The
that's
problem
yeah.
is that you can come up with a lot of different theories, and if they all can potentially explain it, then you can't prove that any of them explain it. But I do think that there's a potential connection there.
I agree. I wonder how much.
So what's going to happen?
I mean, we already know there's a connection between like the top end of the yield curve, or the forward returns of the top end of the yield curve, and the forward return of volatility, right?
Yeah.
Because you use vol convexity to hedge bond portfolios.
So what's going to happen if Yellen has to issue a lot of stuff, or
So
if
it kind of
she,
makes sense
let's
to
say,
use yield backwardation to hedge options portfolios.
yeah. So there might not be a bullish outcome for this week, actually, because
After
if,
Wednesday, you mean? I mean, after we
yeah,
test
after
SPX for
after
5,500.
maybe, yeah, 5,500, yeah. But the so if you think about it, if even if Yellen, say, soft whiffs it, right, and says no duration again, what's that going to do? It's going to put so much pressure on the short end that it's probably going to lift the rates on the short end, which is going to collapse the effect that's occurring right now that market makers are hedging row on the way up. If she issues instead a lot of duration, that's going to impact margin limits broadly, which is going
Liquidity.
to bring down leverage
Yeah.
in the equity markets, which is going to make this go down, right? So it doesn't really matter where she's issuing it anymore. All the benefit we got of her issuing it early, which increased everybody's leverage, and so then you have the Fed, who is their language was driving down the short end. Well, I don't think they can get more dovish than what's already being priced in, right? And if I guess if the Fed is even more dovish and just says we're fully unwinding all this, sure, everything will go up. But
Yeah.
even if they just maintain current market expectations, the net effect of that will be rates up, market down, regardless of what Yellen decides.
Yeah.
And then if the Fed decides that higher for longer, even if it's just flat for longer, high for longer, um, yeah, the net effect is down. So there's the probability that the market is going to go down, I still feel, is much higher than the probability that it will go up.
I mean,
But markets go up, so
so I agree with you. I don't see a path forward this week for the Fed to be as dovish as what's priced in. I don't think they have that option open to them. So I think no matter what the Fed does, short of just coming out and being like, yeah, we're gonna start rate cuts in March, um, which I don't think they can do, right? They would be, that's basically giving up on their mandate, right? Publicly giving up on their mandate, because they'd be saying, okay, we don't care about price stability, we only care about maximum employment. We're no longer going to focus any of our interest on inflation, and we're going to cut rates. And that's really what that statement means. I mean, at least for markets. And then, yeah, I agree. Yellen's left with the choice between continuing the short duration issuance and driving up short term bond yields, and uninverting the yield curve, or she has to issue more duration, which is that's gonna tie up liquidity and reduce leverage. So I don't, yeah, I kind of agree with you. I don't think there's a path forward through this that's as bullish as what the market expects. And I think that's part of the problem, right? Going into this year is everyone expects like the perfect outcome, right? That's what's priced in. Perfection is priced in, and I don't think we're anywhere near that.
yeah. And we've got all these earnings, right, that have so many implications on. Right now everybody is pricing in growth to the point that they're calling it innovation, so that you can't even measure it or quantify it, right? Their growth projections, which are driving prices, are so insane that even tepid but good growth isn't enough, right? And the question is how many more data points can we get, and they can still just call a sigmoidal S curve flattening out an exponential tail, right? Maybe another quarter. I don't know. They've been pretty good at putting their head in the sand so far.
We should probably never use sinusoidal as a descriptor in this chat. But
Probably,
yeah,
yeah. S
I,
curve, S
I
curve.
I agree with you.
Don't go
Um,
up and then flatten out. That's all it means.
it's gonna be a wild week.
Yeah, it is. I don't even know if I want to play it. I kind of do, but the volatility is going to be so high, it's going to be risky.
Well, I think realized vol will be high, but I think vol itself remains at least crushed into the end of the week.
Is it going to be like where I can buy like $5 out of the money options for like $2, like early in the day?
Yeah, we might get there.
That'd be fun. I like that because then you're basically just like you're like surfing the edge of like this like Dirac delta function version of the gamma curve, which is, yeah, it just gets insane when gamma pinches that tight.
Although
There's a bit of money.
remember what happened the other day when I kept buying underpriced puts. They never win the money.
Oh, I know.
You do have to be careful with it.
And then I used that strategy throughout the week last week, and I ended up making money.
Yeah, it was
Last
fine.
week.
It was fine for the rest of the week, but careful doing that into close because
Yeah, no, it was.
there's a lot more expansion of gamma into close, and hedging is more erratic. And so, buying an underpriced option, you might just get fucked rather than, making big returns. Everyone should probably keep that in mind.
Yeah, last week was a bit of an
Underpriced
outlier.
options in the middle of the day are a far safer bet than they are in the last 15 minutes.
Yeah, for sure. But last week was also a bit of an outlier. This week, I think we're probably gonna fall below Vega neutral. If there is ever a week,
Or Vega neutral is going to climb above us.
yeah, one of
Which
the
has
two.
other implications, right?
Yeah,
But I do think we'll be somewhat range bound by it until Wednesday.
I'm going to make a statement,
I want to hear
and I
it.
want you to tell me if this surprises you at all.
Okay.
Vega's at a 2.5-year high.
Mm-hmm.
That's the statement
On
okay,
SPX?
on the market.
it makes sense.
Yeah.
Do with that what you will.
It's the logical conclusion to come to when you have this many short puts fucking stacked on the chain.
I mean, it's.
Sure.
I can tell you the way I feel about it, and but. Jesus. No one cares about responsible tail risk hedging, Fresh.
I know.
No one cares at all. What's skew out? No, awesome.
Over 9,000.
It's at 151.
Oh my god.
Hey, someone got a little bit of tail risk hedge on Friday. Someone was like, fuck this shit. That guy's gonna get blown up. But yeah.
Is there like a kurtosis index somewhere?
I think so. I forget what it's called. Give me a second.
I was
I can tell you.
trying to look for one, but I lost interest and kind of gave up pretty quickly.
Well, that's just your disposition
What?
to get bored and give up pretty quickly on stuff.
Hey, I've been delivering data dutifully
I guess
every day.
skew kind of covers it.
Does it?
Oh, it's the negatives.
I want to know. I want to know how fat them tails are.
So yeah, negatives. Let me think.
I thought skew just looked at.
So it's the
Puts his
skewness of
calls.
a rate of return. Hold on. Let me look at their white
I'll have to
paper.
dig. I haven't really looked into those products because I guess I haven't really cared. You gotta stop somewhere.
Well, kurtosis is your skew.
Do it.
I think
Do it live.
I think skew might be the best. It might be the best CBOE index. Because it's
Wasn't there like
it's
I
derived
didn't
from the
find one
price
that.
of S&P skewness denoted uh uh hmm.
Isn't there a tail risk index? Wouldn't that basically be the kurtosis?
Kind of, yeah.
Yeah, I guess skew would be skew would just be like inverse that, right? I'm trying to see how they calculate it. It's a portfolio of options that mimics an exposure to skewness payoff. S tends to be negative, tries to vary within a narrow range, 4.69 to 0.10. It's convenient. So the transfer of skew to a linear function, skew equals 100 minus 10 times S.
God, this sounds awful. I just want them to get the probability distribution function that the market's pricing in, calculate the skew of that.
So the higher skew, the higher tail risk. So the cheaper the tail risk hedge becomes.
Okay, so maybe they're mixing the two terms together in their index.
Kind of, yeah. Well, that's why I'm trying to see what I'll send you the white paper.
Yeah, I'll have to take a look. You can financialize and sell everything. It's amazing. It is kind of amazing that in the modern era,
So
you
we have like
can
right
you
now we have
can
like a
write
3.4% chance of a 3 standard deviation move on S&P 500 within 30 days. And
that's
like a
that's what the market is implying, right?
yeah, and
Not
like a
the
16% chance of a 2 standard deviation move.
Yay.
so the market is
I'm trying to
okay. So
determine how they
those
use
tails are not fat.
how they're like using the slope of the volatility curve to come up with this. But I don't want to try to dig into it here on stream because I'll just be like jerking off over this for 30 minutes.
Yeah, you and I will spend like 5 hours discussing it.
Yeah, probably.
Yeah, I'll take a look at it offline. I'm sure these people don't want to listen to us
Debates.
try to learn something.
Yeah, probably not.
On the fly. Or maybe they do. You guys want to learn how to learn?
I mean, there's core. So core's the like the vol between the underlying and the index. You could probably imply something about kurtosis from that as well.
Yeah, I'll dig.
Right. There is a tail risk index as well, but it's all how they're measured, right? Like a lot of them aren't. They're not always measuring the exact thing they describe, or at least not the part of the thing they describe that we want to measure. Because they're all using like snapshots of like specific positions within a specific window, and you need to understand the window they're taking the snapshot in to tell you like what the index actually is implying.
Yeah. Okay. Yeah, I'm reading this document, and they're just calculating a skew. So kurtosis is just that quantity to the fourth instead of to the third.
Oh, okay.
I'm sure someone calculates it. I actually have some old code I was digging up where I was trying to find the implied skew in kurtosis from options pricing, but that.
Well, you could if you can figure out
I did it.
You
I
got to
just
figure out a
didn't.
baseline, right?
No, I did it. I just didn't know what to do with it.
Oh, yeah. I mean,
I've got the code.
once you can get the slope locked in, then you should be able to solve for both.
Yeah, I don't know. I got to figure out what to do with the information. I don't know what it tells me that's actionable other
Well, you
than
post it on Twitter and
well,
then you say this is bad.
other than what we already know, which is people are selling a shitload of puts and crushing the tails.
You're all making these words up. You're
Wait,
right.
what?
Carl says we're all making the words up. I think you just have to
No.
limit
Okay.
carbs for kurtosis.
Yes, that's yes. That's right.
Isn't kurtosis a skin condition? Oh, Jesus. All right. Well, Bullish Gherk won the predictions this week.
Wait, do you have them up? Can you show them?
Yeah. And even if you'd picked flat, you still would have lost. Just so you know.
Really?
Yeah. I know that was your biggest concern, and you said multiple times over the week, I hate you for not letting me pick flat.
Yeah.
But You were actually, if you'd picked flat, you would have only been right on Monday. And because you picked slightly up, you were right Monday and Tuesday, like a little bit of Tuesday. Girk
I was off
or
by a
Dirk
lot.
was just wrong all week. Bearish Girk was an idiot. Bull Girk, that asshole, he was just spot on. Fuck him, right? Fuck Bull Girk.
Yeah, fuck Bulgurk.
Yeah, I agree.
Fucking dick. He ruined it.
He did. Although he didn't account for Vega neutral acting as support into the end of the week.
All right, I think we
Well-
should start off with bullish Girk this week.
Start off with bullish Girk. Bullish Girk's gonna be pretty easy, I think. It's gonna be like this.
Oh, I thought you were just gonna move it over.
Oh, I see. Using your own TA, huh?
Boop.
Filthy bastard.
There's Bull
you
Girk.
think you think realized vol is actually
Actually-
going to go down?
You know, Jay Fresh.
Well, this is bull. I forgot. This is bull Girk.
Yeah.
You have to feel that realized vol is going to go down if you're bull Girk.
Yeah. You have to believe that realized vol is always dropping. It's never an increasing value.
You know, if the index goes to infinity,
Exponential
vol is
realized
zero.
vol decay.
If the index goes to infinity, vol is just zero. Because infinity plus 1% is just infinity. There's no vol.
Shit.
Well, yeah.
Something to think about.
It is.
Well, the index percent changes go to zero. Yeah, for sure.
Mm-hmm. Yeah.
Yeah.
Mm-hmm.
And then we can all live in paradise.
All right. Well, does bearish Girk want to go next, or sorry, unbiased Girk want to go next, or should I go next, or should Jay Fresh?
I'll
go
let
next.
bearish Girk go last.
Okay, I'll go next then. Okay. So open where we closed. Halfway through the day to 4,900. Then close the day 48.85.
About 49.
You're gonna need more points than that.
Oh, all right. I'll just make a new line.
Oh my god.
Yeah, I got a lot of points on this one because it's a volatile week. So I'm gonna really.
So midday 4,900.
Yep. End of day 48.85. Midday next day 4,900. And then end of day that day 48.80. And then 2 p.m. on Wednesday, 48.90.
Hold on, Dick. All right. 40 midday Tuesday or Wednesday?
Yeah, 48.90.
48.
Yeah, Wednesday 48.90 2 p.m. And then close at 48.60. And then Tuesday midday 48.70. Yeah, Thursday now. So midday Thursday 48.70. Close 48.65.
Jesus Christ.
All right, and then Friday, you could just draw a straight line down to 48.45.
All right.
There we go.
Jay Fresh.
Oh my god. Okay. We're gonna open where we close. And then just draw a straight line to end of day Tuesday at 49.10.
Right?
Gap up to 49.40 on Wednesday morning.
All right.
And then close at 49.50. Or no, go up to 49.50 midday. Sorry, midday Wednesday.
All right.
And then from there to close on Friday, 47.50.
Ooh. Damn. All right. Bear Kirk. Fuck you guys. Let's see. I have to presume some. So I still think like 49, 20, 25. I'm gonna say, yeah. I'm gonna say there for Monday. And then I
I like
think
how bearish Kirk is more bullish than bullish Kirk.
he's the equivalent bullishness on Monday. But then Tuesday, I agree, we gap up Wednesday. Back towards like 4,900. Drift up 15. We end the day. Back at like 48.75. Thursday, I think we traded flat. Flat slightly up. 85 close. That's a little higher than I wanted it. I wanted it at 49. There we go. I mean, that's just like my real assessment versus trying to be as bullish as possible. It's not going to be too different. But it is.
You're pretty locked in on your expect. At least you're consistent.
Yeah, I mean, at least the only really the only way it breaks is if it breaks here with like the Fed and the issuance. I guess I'll just factor that in since they're so close. Like I'll assume that like we have long duration in the issuance, or the Fed is super hawkish. In which case, I think Thursday would be like kind of like what Dork expects, like slightly down into Meta earnings, right? And then like Meta misses, and we go down to like 4,800. Well, let's say like 48.10. There, that's the more bearish outcome to the week, I think. But then I also think next week we bounce again.
You think Meta's gonna miss?
I think, well, one of them might, right? It only takes one.
Yeah, I agree.
I would say that
Hopefully.
Of the two reporting, or of the three reporting on Thursday, Apple's the most likely to miss, and that'll outweigh any beat by Meta. The question is if it'll outweigh a beat by Amazon, because I think Amazon might beat.
I don't know. I've been trying to buy shoes on Amazon, and it's pretty terrible.
Yeah, but people spent like that $20 billion bump in credit somewhere, right? And it wasn't all on iPhones.
I did end up buying a pair of shoes on Amazon, so
yeah. So you still gave them your money.
I'm pretty locked in. They've locked me in pretty good, so yeah, maybe it is bullish.
But I think that's actually where things either break or don't this week is going to be. I don't think it'll be the Fed, right? Like I think we'll start to see like a more significant shift in hedging and positioning, but I don't think we'll see I don't think we'll see a breakdown from like the Fed shit until next week. And then I think I think next week for that. And then so Thursday, it's just going to be that kind of battle between Amazon, Meta, and Apple. And if Apple and Amazon beat, we're definitely going to have a good end of the week. I don't think Meta will
Yeah,
miss, but I mean, if Meta misses, that speaks to a whole nother side of the market, right? If advertisers are starting to pull back, that could be really
oh yeah.
bad. Yeah, but we'll know about that
Oh
earlier in the
yeah,
week,
we'll know
right?
about that with Google, right?
Yeah, that's what I'm thinking. Is like Google's going to be really telling for Meta. Like Microsoft's going to be pretty telling for Amazon because we're going to be looking at like Azure versus AWS.
Yeah,
Um,
that's all people really care about.
Yeah, and so I'm thinking like Tuesday's earnings will tell us a lot about Thursday's earnings. Apple's the outlier, but Apple's projected down, right? And if Apple projects down again and Microsoft misses on Azure, then shit gets real bearish.
I'd agree with that. I
Election
don't know.
ads
Oh,
haven't been
goodness.
cranking yet. I mean,
I,
even if they are cranking, the spend on those isn't as much as you'd think.
I still think there's enough juice in the tank of private equity and AI startups that it'll juice the clouds enough this quarter.
Maybe
We'll see.
we've been spending a lot of money on cloud services, so
That's kind of why I feel like there's going to be a gap up on Tuesday because I think Microsoft's going to have good earnings.
I kind of agree. I
I
I'm kind of interested where Google's gonna fall though. The market expects bullish earnings on Google, and Google here's I feel that Google and Amazon are the most undervalued in the Mag 7 relative to their performance. And so I think that if either of them beat, then they like both of them have a pretty good chance of beating and seeing significant gains in their market cap. Like
yeah,
I think
we'll see.
Amazon can be priced about 10 to 15% higher, and Alphabet can potentially get priced up like 10%.
Let's do it. Let's crank this bad boy all the way up.
Yeah, let's see where it breaks.
Yeah,
I just love how we are collectively so bullish, and not like you and I and Jay Fresh, but collectively as a composition of idiots, we are so bullish on the economy when 30% of economic output is concentrated in less than 20 companies, and nearly all of that is dependent on small businesses doing well into the next 2 years.
buying Excel licenses.
It's glorious. It's wonderful. We you know, and to get on Jay Fresh's audio stuff because I am an audio guy by profession.
Thought you might
Uh,
like that.
the implication economically is that having this large amount of concentration means that it will serve as a signal amplifier to any broad economic sort of weakness that we experience. But
I mean
anyway,
I agree. We're definitely
Apple's got to
we're
Apple's got to
definitely
sell a lot of phones in China.
dude.
yes,
That's the most concerning part about
Yeah.
Apple's earnings is Chinese retail spending has just been dropping like a
Yeah.
fucking rock, and that's really bad for Apple. It's their second largest market.
Yeah.
And it's not far behind the US, right? It's very close to being almost as large as their US market, so it represents like a good 40% of their like consumer side sales. And yeah, China's in the middle of a financial crisis, and I think like a lot of people are ignoring that because their GDP's keeping up, kind of, right? But I don't really believe any of those statistics. um, Like their unemployment's only bumped 0.1 in the last like 6 months, but their youth unemployment's like 30% or something. So yeah, I'm not sure I entirely believe China's economic data, but I mean, just like ground level, you can look. They're definitely having some issues. Like they had a shadow bank go under this last quarter. They're still dealing with the fallout from the real estate industry. Um, they're massively deflationary, right? But you'll notice that the PBOC isn't touching those interest rates. And I think that tells you a lot more about the economic data that they're not pushing forward, is that they're still worried about inflation, they're still worried about price stability, and they're keeping their like 1 and 5 year lending facilities at a pretty high rate, given the fact that they're experiencing this massive deflationary cycle, right? Although I will say that due to their government structure, they're probably gonna exit their financial crisis far better than the U.S. Because we went the other way. We tried to stabilize everything, and we can't force austerity on the American public, but China can. China doesn't give a shit. They don't. They're like
Yeah.
go fucking eat pangolins for the next 3 years. We don't care.
What if, and hear me out, don't just go with me here for a minute. What if Apple just starts selling every American 2 iPhones?
Is one of them $5,000 and goes on your face?
Yeah, there. But you have 2 pockets, 2 phones.
You mean the iWatch? That's what the iWatch is.
I mean, in addition, like put another phone
Oh, so
in
you're
your
saying
other
like a watch
pocket.
and 2 phones?
Yeah.
And VR.
What if they should sell us holsters if they're going to start trying to push that?
You have
We
two
need a
pockets. You put
bandolier.
2 phones in 2 pockets.
No, we're selling Apple bandoliers where they're buying like 8 phones and strapping them across their body.
Perfect.
And what's going to happen is the cell service providers that do their crazy buy one get one free deals are going to be like, buy one get the next 7 for $20 off.
Hear me out.
Yeah.
What if they just put an like took a T-shirt and they like hot glued iPhones all over the T-shirt and called it iShirt.
Oh
So
my god.
you could display whatever you wanted on your iShirt,
What if they did like an
and
Elon Musk and they
it would
promised
only
that
cost $35,000.
you could provide cloud compute personally to pay off those iPhones over time?
Oh yeah,
So
use
you're
those
like a
iPhones as part of the
walking
bot.
5G cloud, part of the cloud infrastructure.
Yeah, now you can, do your part to make sure you're
Ooh.
reducing the costs for Chat GPT.
Yeah.
If you buy, yeah, you buy an H100 and hook it up in your house and sell that. Yeah.
Yeah.
And in return for that,
How much are
3
they?
years. Well, they were retailing, I think, at some point for close to 40,000, but nobody knows how much they cost. I've had
Well, with
people on
eBay,
Twitter
it's
even
probably
tell
only
me
cost
like, "Oh, people, I know people who buy them in bulk and get them for less." It's like, how much? And then they just disappear forever, just Epstein's immediately.
Well, I'm pretty sure he said 65% wasn't crazy.
65% of what?
Of the original cost.
What's the original cost?
$40,000.
Okay, listen,
And
I've got a 3080 Ti. How much compute can I do?
all of it.
Awesome.
No,
Yeah,
you're also not
that's a
factoring
solid
in
down payment for the iShirt.
Yeah.
you're not factoring in JFresh too with the iShirt. What you could do is you could actually buy the iShirt on loan, right? But the collateral for the loan is the iShirt.
Ooh, also use the iShirt display ads. Done.
Yeah,
Oh,
boom,
perfect.
done.
That's it. Oh my god,
You
you can
pick
act as an intermediary transaction point for Apple Pay too.
Ooh.
Holy shit.
Yeah.
Can I mine Bitcoin with the shirt?
No.
No.
Apple Coin, but they don't have that yet.
Oh, that gets released with the shirt.
Yeah.
They should call it core coin, like an Apple core coin.
Jesus Christ. Our economy is
You
such a
know,
joke.
they're
Anyway.
gonna call it iCoin. We already know that. Just like the iCar, which I guess is a real thing.
Yeah, they're driving it around Palo Alto in like their little test track that they fucking built with so much ungodly amounts of money.
All those bonds.
Oh yeah, well the bonds that were left over after the stock buyback.
Yeah.
What about eyeglasses? They're already making those, but nobody wants to buy them. The eye penny?
Yeah. I mean, have it like, okay, this is what I don't understand. Like, all the ideas that people are coming up with are things that all the biggest companies have already tried that went nowhere. Like AI is just Siri and Alexa and Hey Google all over again. Cortana. Nobody even remembers Cortana. But suddenly Microsoft's going to nail Cortana 2.0. Like eyeglass, Meta came out with those glasses, those Ray-Bans that were basically just Google glasses that nobody ever bought and nobody
ever
used.
bought the Google glasses either.
Yeah, and now Apple's coming out with, admittedly something quite a bit more involved than those things.
It was
but
like
still,
when all the
like
the Web3
essentially a
people.
VR headset, which Meta's already, tried to sell a bunch of VR headsets to people, and nobody wants those either. So it's like the movie industry. It's just every year we get like the Avengers 15 attack of more Avengers, the same thing over and over and over again, and this one's gonna blow the box office off the ceiling off the box office.
Jay Fresh, I sent
And
you
each time it flops.
I put in the Dick chat. I put a little short skit that I want you to watch when we're done with Fred Armisen using the Google glasses. It's fucking hilarious.
I think I've seen that. That's really funny. I mean, it reminds me every time like a new one of these products comes up, it reminds me of like when everybody on games, like all the Web3 people on GameStop were like, guys, GameStop is going to get all these games together and they're going to create a platform where you can stream video games. And I'm like, wait, didn't Google just scrap that? Like after pouring billions and billions of dollars into it?
Yeah.
Dude, GameStop had such a great, pathway to success with the whole Web3 thing if they used it for authentication and not for fucking goddamn anime waifu NFTs.
Yeah, but that was never going to happen. That's like a different industry, right?
Sure, but they could have made fucking tens of billions of dollars just,
I mean, I don't know why I
right?
don't know why they didn't lean into like using it as like an alternative form of DRM and an anti-piracy tool, right? Fucking patent that shit and sell it to every game developer. But whatever, here we are.
Yeah, Ryan Cohen's a dumbass. He was like, I just want anime waifu NFTs.
There were a lot
I don't
of
want to
things
issue
that
debt when my company's worth 500x its forward cash flows. I'll just sell my. Ryan Cohen took the shitty path, and that's the problem, Jay Fresh. We were talking earlier. Why do companies issue debt? So you don't get Ryan Cohen, and where your stock gets cratered because the CEO sells shares to his shareholders versus just issuing debt at a way higher scale.
Fair.
Like, imagine if Ryan Cohen had issued $15 billion of debt instead of doing the share offering. It would have sold in a heartbeat too, right? All the shorts would have piled in and grabbed it so they could have that liquidity.
Oh yeah, but the thing is Ryan Cohen would be like, "What the fuck am I going to spend this money on?"
Can you hold on?
But he'd have 15 times more of it. What?
Can somebody who's not banned from Superstock ask that and like try to get? I want to know.
Do transfer agents hold bonds?
Can you DRS a bond?
Maybe we should ask the French government.
That's true.
Yeah. If someone wants to like inject that, because they'll look for it and they'll figure it out. I don't want to look for it. I don't care.
Yeah, I don't give a fuck. I'm not going to DRS my bonds. Although if you go to Treasury Direct, that's pretty much the same thing, but you're doing it
Yeah.
with the government.
Huh.
Yeah, I don't think you need to. There's synthetic routes to shorting bonds, but I mean, most of it's all very well accounted for, right? As far as
I mean,
liquidity goes.
you could short a bond by taking out a loan and buying bonds with it. There you go. You just shorted bonds.
Yeah.
So
You can
could
also
we
just borrow
solve
bonds and short them, right?
could we solve the rehypothecation crisis by just what if companies, instead of selling shares, they only sold bonds?
Hmm.
Then we would have a debt spiral.
Yeah, that'd be a problem.
We're already in one, but that's the government, and we don't care about that because government debt doesn't matter, right, guys?
Yep, not at all.
Should I really just touch on that really quick? The whole debt
You
spiral.
could, but you're not gonna. I mean, Paul Krugman has already said that government debt doesn't matter because it hasn't mattered.
He's a goddamn idiot. Okay, that guy.
Everything is linear.
Keynes, just so you know, everything you're about to say, Keynes says is wrong.
Okay, yeah. Well, Keynes can suck it. So he's actually a pretty good economist, but
no, he's not. No.
There's some things that he said that were.
I'm good economist.
The Keynesian beauty contest is still maybe his only valid point. And
how does one measure good economists? Because they don't create anything that can be tested or evaluated on its merits.
Well, they don't create anything that has merits. That's the trick.
Yeah, a good economist, Jay Fresh, is somebody who actually looks at economic data objectively. That's why they don't exist.
I would say that good economists are really people like Buffett or like Graham, guys that weren't really economists.
Yeah, well, the best
had a far better idea of actual economics than economists do.
Yeah, because they're actually acting within it and taking advantage of it. The real economy. Sure. Yeah.
I would say like Jamie Dimon's statements on the economy are far more important than like Claudia Solms.
Claudia, if you're listening, I'm sorry. Please unban me.
I've posted a couple critical replies to her, and now I'm about to probably be called a misogynist.
So well, don't be a misogynist.
I'm not criticizing her because she's a lady. I'm criticizing her because she thinks that inflation is completely defeated and that the Fed needs to cut rates in order to prevent credit risk from blowing up. Which
the best thing to do, just screenshot all of it and save it, and then wait for inflation to go back up, and then just start posting them all and tagging them.
Ooh, you're right. But anyway, so what I was getting at is with where we're at with interest rates, and this is kind of like this is one of the challenges that JPOW faces is with keeping rates high, is that government interest payments have just exploded, right? We all know this.
Yep.
The problem with this is that if the government's revenue does not match these interest payments, which it doesn't, what we're going to end up with is Janet Yellen, some portion of her debt issuances will literally just go towards paying those interest payments. And the problem with that is it's going to, as long as rates remain high, it's actually going to start to turn into a bit of a cycle where the government issues more
because
debt.
we can still issue debt. Like we can still issue debt at longer terms, right?
We can, but
that reduces our future spending power.
Right. The more we issue, the thing is, the more we issue, the less cash other governments have to buy these issuances, and the more they're going to demand from the yield, right?
Yeah.
And so what you may end up with is yields continuing to rise regardless of Fed policy. That's my biggest long-term concern right now. I guess medium-term
I mean, aren't
concern
we kind
over
of
the next
already
few
there,
years.
right? Like expectations for Fed policy are for, rates to be down. Like like market expectations for Fed policy are for rates to be down to like what like 3% by the end of this year, right? And then but then we have like the 10-year priced at 4.15. So I
Yep.
think I think we're already seeing that. I mean, don't forget, like there's like a maturation cycle, right, of these bonds, right? So if they're issuing short duration, they're only paying interest on them for a brief period of time, right? Um, so issue, and then you get a decline in your interest rate payments moving forward. But if you start issuing longer term debt, you're paying off that debt more over a long period of time. So even
Yeah.
if your issuances slow down, your debt payments stay high. But there's always debt falling off, right? So there's a constant rotation. Um, and what they're trying to do is spend a lot and keep debt interest rate payments short, right? Like so you're only paying largely you're only paying between like 4 weeks and 6 months, with less issuance further out. But that's oversupplied now. Like the short term is way oversupplied. So in order to pay off or keep paying all that short term, we've got to start issuing more long term, and then eventually we're gonna have to start issuing a lot more long term, which then reduces our ability to issue short term in the future because we'll be paying off all of the long term debt.
We'll just pay it off with more short-term debt. Fuck it.
Yeah, can I want to give you something, Kirk. I know we're running really long, but
Yeah, it's okay.
I'm gonna post it in our little chat here, and this is on the Twatter as well. But it's buried in all my
This
shit
is our
posting.
NGDP M2. Oh, okay. Well, NGDP is
So
going to keep rocketing as long as debt keeps going up.
yeah, so this is just kind of the way I think about the issuance, and I don't know if this is correct, but it feels right. So obviously, if the economy is chugging along and growing, there will always be, and the growth of money is growing roughly at the rate of the economy, which is growing roughly at the rate of the debt, then everything should be fine, right? There will always be enough money and therefore roughly enough demand to handle the issuance of new debt, right? Obviously, there's a lot of inflationary challenges around managing that. But that's not really where we find ourselves right now. So this chart kind of shows that, first of all, this is all percent change, right? So
Yeah.
you look at like the purple line, for example, which is sort of whipsawing up and down. That's the percent change year over year of the growth of U.S. debt. So U.S. debt is kind of growing around 6-ish% a year. And before the fiscal impulse during COVID, it was like 4%. So as a consequence of that higher debt issue, the rate, and this is the deficit specifically. So as a consequence of that higher growth rate of the deficit now, obviously we have a hotter economy, right? It wasn't I was actually surprised to the downside on GDP and nominal GDP on the last print, because it was only like it was under 5. The nominal, I think, was under 5,
Yeah.
which was surprising to me, and it's not super great. Um, you want at least that to follow the debt. If the nominal GDP isn't growing at the rate of the debt, then that can potentially be a big problem. But then you look at M2 right? And because of all the tightening, we did have a period where M2 stopped growing and even declined a little bit, and now it's starting to come back up as we had all this loosening that occurred over the last 3 months.
Yeah,
But there's still kind of the shade. What I've shaded in yellow is essentially like the gap between the money in the economy to buy the debt and the issuance of debt. And so the question is when does this gap get filled, or does it get filled, right? And I kind of draw a line if it's linear and it continues, maybe middle of the year ish.
Yeah, I
And
mean, if we see
and
NGDP rise, then we should see M2 fall and debt issuance fall, right? And then, but yeah, as long as debt is solidly like, what is that, almost 2.5% year over year above GDP.
yeah, it's hard because of I think that like huge drop and then rebound was that was the debt ceiling, right? Did that happen around June? When did the
Yeah, it
debt
was in
ceiling
there.
hit?
Yeah, June, July.
Yeah, so that was like drawdown
Yeah, she ran
on.
out of debt to issue for a few months there. Remember, we were
Yeah, because
getting
I
really close
pulled
to the
this.
TGA being like massively underwater.
Yeah, so I pulled this. It's actually a decent website. It's run by the feds or the federal government. Called debt to the. Just go to Google and type in U.S. debt to the penny, and it basically every day they update what the U.S. debt is to the penny, and it's nice. I pulled it from that. So obviously the debt she had to stop selling and start drawing down the Treasury. So that's why that like whipsawed like that. But it's like 6%, and it's about where, right? I mean, now nominal GDP being under 6%. I mean, last quarter it was like almost 9. So now that it's under 6%, it'll be interesting to see going forward. If that number stays low while debt growth stays high, that implies that we're getting way less than $1 of, well, implies that we're getting less boost for our debt, right? And we don't want unproductive debt. That's very bad.
Yeah.
But anyway, that's how I think about it and why I think rates are still going to go up, because there's not yet enough money generated naturally in the economy to handle this extra issuance, and so rates have to rise. But then once it reaches that, I think they'll level out.
Yeah, well put.
Yeah.
I don't know.
The
Could be wrong.
Fed's approach to QT here is kind of a problem also. I guess I should mention that along with this. Right now, like the Fed's only really quantitative tightening. Their quantitative tightening is basically what is falling off of their balance sheet, but they're not marking to market any of their balance sheets. So the Fed's not taking any realized losses despite sitting on massive amounts of unrealized losses. And that what that kind of does is that hands control of monetary policy over to the Treasury, who's politically incentivized. Um, and so, as long as Yellen wants to keep rates down, all she has to do is issue more short duration debt and continue to drive up money supply. The question I have is at what point will the Fed be like, okay, this is increasing money supply too much. We're gonna need to actually like tighten our balance sheet and sell hold to maturity securities, right? We're gonna need to shed. We're gonna need to mark to market those losses.
Yeah, and I'm trying to find the name of this. There is actually one economist who I think has a decent head on his shoulders and actually wrote an article that I think is worth reading about this issue
Oh,
of
okay,
how the
I'll be
Treasury is.
interested in reading
I'll
that.
have to I'll have to
I
find it.
posted like kind of an article about that pretty recently on my Twitter. Is that the article you're thinking of?
Maybe I don't know. I didn't see you post one, but
Yeah.
it could be. Yeah, I'll have to find it. It was. I know. I'm pretty sure I shared it at some point, but nobody's on Twitter, so.
All right. Well, those are our expectations for the week, guys. I think probably good wrapping this up here.
Yeah.
Thank you
Yeah. I
so
got. I
much.
got kids to wrangle.
Yep. Thank you
Thanks for
guys so
having us
much for
on,
coming
dude.
on. I appreciate it as always.
Yeah.
Yeah.
Always a good time.
I'll see you guys. Do we have anything tonight? Or are we clear? I can't remember.
I don't know.
I think we might
I
have
have no
like
idea.
There's
might have to
nothing.
do shit
There's nothing
tonight.
on the calendar, but so if we do have something, it needs to go on the calendar.
All right.
I'll have my people call your people.
Yeah, have your people
Thanks.
call my people. Thanks for coming
Yeah.
on, guys. I'll see you later.
Later, bud.
Yep. Bye.
Bye, guys. All right, everyone else, if you got any questions, I'll be around for the rest of the day. Feel free to hit me up and ask me. If I'll have Pickles picks out tonight, maybe a little later. I kind of want to see which way futures trends. I know they dropped a bit going into close on Friday, so it'll be interesting if we start to see like a breakdown below Vega neutral. That has some implications for price action this week, which I'll go over tonight if it happens, but if it doesn't, then I don't need to worry about it. Again, earnings season, so don't expect too many equities picks. I'm gonna be trying to avoid sympathy moves in equities. So I'll probably stay focused on indexes at least till we get out of earnings, which is gonna be like this coming Friday. I might have some equity picks in there. I've got a couple long-term picks that I'm waiting on, but I might do a write-up on one of those this week. But those will be out a little later tonight, and then I'll continue to update them every day. And I'll see you all tomorrow for Market Open. You guys all have a great night and enjoy the rest of your weekend. Later.